arbitrage here that we could have traded for the outright short blue line narrative. Obviously, the top off and the pound had already dropped, so the pound I didn't like as a buy trade at that stage. But certainly, the blue line looks very exposed, and that's obviously the trade you can see in the background. You can actually see that trade starting to show up into this area here. This is the original trade here. So when you see that trade starting to show up at that point, you're starting to recognize where the opportunity was to get that trade done. If we zoom out, obviously it's about trying to figure out what you're going to do on the S&P at that stage, because obviously the natural trade is to sell it. So obviously you're going to be watching that sell opportunity in the S&P. I've got the line in the wrong place, my mistake. So it was at the same price, but it's just been put in the wrong place. But here we go. Okay, so same price. So the idea is very straightforward. The trade that you're doing here is, of course, short the blue line, which means sell side the S&P, buy side FTSE. If you're going to hedge it, you so if it's red, you buy sterling. A lot of the times what's going to happen in that narrative is that if you're red here, you're going to be able to buy sterling. So if I see this red, unless there's a massive carry in my favor, I'm not going to buy it. I'm going to buy it on the dip. You know, so if this blue line starts falling and the pound then does touch into the bottom edge, that's the best place to start doing that as a hedge trade opportunity. So you bid the dip price. So if you want it at that stage, if the carry hasn't gone bearish. So that would have put you into the full hedge. Now, when we get this green line, you know, I don't know why it's came up with a green at that point. It's just not going to be of any interest to me. I'm better than what the green line's telling me, so I'm not interested. The trade that did stand out for me was this green line here. The carry had started to roll again in the short term. Look, so the carry had started to roll down in the short term. The blue line was now really moving for us, which was a big bid on the FTSE here. And the pound ended up testing the highs. A brilliant opportunity just simply to get short sterling against that long position you had from earlier. A nice sweep of the price, a nice sweep of a top edge, and we get an easy money short coming back in. And obviously from that easy money short coming back in, the trade comes away from that price beautifully, and we get a nice run to the bottom edges. Absolutely superb. On the price rally, you're obviously going to be watching for opportunities to resell it. Didn't get one. And obviously now what we're seeing is we're seeing a big divergence starting to creep into the blue line. So what are we going to do? Well, I'd already closed out the S&P short trade at break even here when the pound exploded, when the FTSE exploded here. So what we're going to be doing here now is we're going to be watching that S&P, because the idea now is to try and buy the S&P on dips and sell the FTSE. Okay, so we'll just mark off that trade there. We're going to buy the S&P on dips, and we're going to sell the FTSE on rally prices. And that'll put us into a position for this afternoon's business. Now, obviously, if we're doing that, if we want to hedge out that position as well, if we want to try and get a bit of sterling value into this, of course, if we're buying this, we're going to be selling this. You know, we're going to be looking at that reversal trade. If this is green, this will be a sell. So obviously, if you're going to be looking at that as a sell, you'll be watching for perhaps this kind of price area here for that sell trade to come in. And you can see that that has found a green area. I don't like the sell at the moment on the pound, because obviously at the moment the carry's rising. So the only place I can sell it just now would be to put in some offers above this current price here, and that's where I'm currently offering on sterling at the moment. Yeah. So hopefully that makes a little bit of sense. Using index arbitrage, we can recognize how the trade should evolve from this point onwards. Did anybody take the 45 offer? It has traded 37s, so you know, at least you've got to stop at break even on your 45 offer. Two likes, which is record breaking, of course. And we've obviously put in here cash open in 5 minutes, price the market, bid offer at 86.4550s, 86.10. So we're going to be offering 45.50 and a bid at 86.10s. I did shout it before I did the tweet, of course. And obviously we've tested the 86.45 since the tweet. and it's enabled you quite easily to get that short sell into the markets on the rally. And the 86.45 sell, as I said, has just gone and done yourself a beautiful $100. How's that, guys? How's that? Don't all type it at once that you all got the offers. So I'd rather have the offer. That's why I pulled away the bid, of course. I would rather have the offer. So we're now making 15 ticks on that trade, just about 20 ticks on that trade for a very, very nice $200 sale, $200 profit on that trade. We came into the 45 area and we ran the sweep. We ran the kind of sweep trade into the flush, and that $200 paid into the bank account literally within a couple of minutes. Very nice indeed. Now we want to try and be in this for 2 o'clock. We obviously were able to get in at 2 o'clock. And again, it comes back to that thing about making sure you're in the trade for 2 o'clock. Because if you miss it, guys, you're just, if we can't get it, we can't get it, right? That's why we priced it up for you before 2 o'clock, so that we could give you a chance at least of having the right trade for a change. And look at that, guys. 45 is now trading 15s. How does $300 paid into your account sound now, guys? Pretty good? Well, it sounds pretty good to the guys that decided to have a bit of a brain and take the bloody thing. You know, we don't just do it for no reason. You know, we don't get these trades wrong very often. You know what I mean? So, you know, when you see it and you're starting to look at it and you're starting to consider it, it's time to get busy now, isn't it? It's time to get busy with it. What a winner. What a lovely, cheeky little winner right there. So, wakey, wakey for those that are sleeping at the wheel, guys. That was a great trade and a lovely outcome. And you needed to be trading. You needed to be trading at 2 o'clock if you can. If you can. I'm not saying there's a trade always at 2 o'clock, by the way, guys. I'm not saying there always is, but as a trader, you absolutely know you're really, 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 really trying to be short. You're really trying to be short. Now, how did I manage to price the bids at 10? Well, because if you look at what happened beforehand, right? If you look at what happened beforehand, this is the concept of pricing the market properly. If you look at that spike on the value line, it's lower than the spike was here, right? Everybody can see that, agreed? So if it's lower than the spike was there, well, it can't be the same price. So in other words, we've got to then look at that and say, well, where is that spike pricing the market to? Where does that spike price the bids into? And I looked at that and I thought, you know what, 10's probably realistic for a bid. So we come up with a bid at around about the 10 price, which would take a sweep into this narrative here, and therefore we come up with a bid of 10. If we've come up with a bid of 10 and we obviously want to be sell side, predominantly sell side, then I need to come up with an offer price. Really easy. It's the ledge. The ledge was at 48. Do you see it? Yes? You see the ledge at 48 right there, 48, 49s? So we've got the ledge. We've got close to the 50s. We've got the area that we want to do business into, this area here, 48s, 49s, 50s. And what do we start thinking? We start looking for some leans. We start considering the lean environment at that stage. We look at our deltas. What are we looking at our deltas for? Not for fun. We're looking at our deltas to see how many buyers are in there. And if there's a lot of buyers, we've got a very easy lean. If there's not a lot of buyers, we trade the top edges. So we look at that trade to figure out where the buyers are located. And if they are located, we deal. If the buyers are visible, we deal. If the buyers are not visible, we always have to just be careful. We have to wait for those top prints to start showing up on our screens. And there was plenty of buyers, by the way, guys, just off the 50. There was plenty of buyers visible. So if you look at Delta, it gets a little bit busy at this time of the day, but, you know, we can clear the charts, but it's not that important. You can see the Delta was punching here. You can see all these offers coming in at the top edge at lower prices, and you can see a couple of small block buyers getting jammed into that price area with selling pressure coming back in. 80.47, look, 86.47s. Not fading the top edge because there's too many buyers to fade the top edge. You're selling on the way back out. 80.47s. And obviously the takeaway took us all the way down to 86.15s. 30 ticks, $300. Money's in your bank account, guys. Money's in your bank account. Nice outcome. Nice trade. And obviously you had your target price in mind, because obviously all you did was draw a line across the prior lows. You had a target price in mind, and now you're looking to sell upticks. You're looking to try and get into that sell on an uptick trade. So very, very, very well done, guys. I like it. 47 a fill for me. If anybody beat my 47, let me know. Type it in the box if you beat 47 a sell. 47 a sell. Anybody beat it? Was that in the direction of the order flow? Was that in the direction of the shape of the markets? Was it in the direction of the shape of VWAP? Has the VWAP been bearish today? Yes or no? The VWAP has been bearish. Was it a little bit above VWAP? Sure. But it's still a very bearish VWAP today. The idea, the storyline, the processes of VWAP, very bearish overall. A kind of exhaustion macro view of the market. We can see that from that 5-minute chart rather than the 15-second chart. And you can see the outcome all the way down to 20. It's beautiful, isn't it? Absolutely beautiful. Well, Michael, I think that was the only valuation we could come up with. I mean, that's the point, I suppose, about pricing up your market, isn't it? When you price up your market, the idea is that you're trying to figure out what your bias is, and you can't price a market unless you know what your bias is, because otherwise all you're going to do is put the offer above the prior high and the bid below the prior low, right? That's you. It's not you hiding from the market. It's just you that you're not sure, right? You're not sure, right? You're not clear about what you price up the market as. So, when we're that's new. We've got a big orange box appeared on my screen there. From Serge. He's got his own orange box, guys. I want an orange box. That's unfair. So when we're looking at pricing a marketplace, we can obviously look at a market like this, right? So let's assume the value at the moment is doing nothing, right? Let's assume the value is doing this. Let's put some prices on this. So let's put some ideas up here. We'll do 80, 70, 60, 50, 40, 30, 20, 10, 0, 90, 80, 70. Okay, so we've got some prices on the screens now, okay? The value line is the black line. Could you price me up a bid and an offer just now, guys? Price me up a bid and an offer. Come on, guys, price me up a bid and an offer. The only challenge we've got is the only thing that we know for sure is what the value is doing. We don't know where it's came from. In other words, we don't know if the market's been really bullish or really bearish, correct? So we don't have that information to help us. Does everybody understand that? We don't have that information to help us about market directionality. All we've got on the screen is a value line. So according to what I'm looking at, my offer at the moment, obviously bids, always first bids. If I'm going to bid and offer this, I'm going to bid 90 and I'm going to offer, for argument's sake, 70. Yeah, reasonable. I'm going to bid 90 and I'm going to offer 70 if this is what it's doing at this stage. So basically what I'm saying is I don't have a view on value at this stage. It looks neutral. So what I'm thinking is they're going to run some sweeps to do what's called price discovery. So they're going to run some sweeps to do price discovery, and I'm going to bid this price here, and I'm going to offer this price. That's the real bids and the offers, not the book bids and the offers, the real bids and offers. So let's change it up a little bit. Let's change it up a little bit. Let's let's take the price out around the balance area a little bit. Let's assume they run the sweeps. Let's assume they run the sweeps. Let's assume they take it back into value. And let's assume now that the value line, which had been this direction here, suddenly does this. Price up the market for me, guys. Price up the market for me. When we price up a market, we want a bid and an offer. There's a couple of challenges to this, but let's see how you get on. Now, there isn't a right and a wrong answer, by the way, guys. There's not a right and a wrong answer. There's only your answer. Everybody's got a different opinion, and obviously the idea there is that you can always pull those if you're not happy with them. Now, obviously, with value collapsing, where is the current price? The current price at the moment is on an uptick, right? So that's a challenge to offering into this at this point, correct? But obviously, if it goes much higher, it could well tip the price. Obviously, the balance area, the POC, is probably somewhere in the middle of this rotation. So obviously, if it goes much higher, you'd be probably offering 60. Agreed? You'd probably be offering 60 into the prior highs. So obviously there's a challenge here because at the moment this is going up. So you've got to be careful about getting too aggressive on your offers. But obviously one would imagine that this is leaning against a what? This is leaning against a stack here, isn't it? It's leaning against an edge because there's probably a POC here, correct? So in other words, this offer that I'm going to make for this market comes with a caveat. Okay, so there's going to be a little narrative that has to form here. If I see bids absorbed, let's change it to buyers so that we don't interchange the words. Buyers absorbed, the BERS. If I see buyers absorbed, I want to offer the 30. If I don't see the buyers being absorbed, I'm not going to offer the 30 at this stage because the price is going higher. I've got to be careful just now because this would be an easier momentum sell, wouldn't it? And obviously, if it's going higher, where is my bid? Well, I'm just going to put my bid, say, at that stage there, as this price comes in here. It's at 90. I'm going to put my bid, say, at 70, because that's the low price we've got in the chart. Yeah? But there's a caveat to that. There's a need to see that buyer being absorbed, because at this point, I don't know that buyer's absorbed from this screen, correct? If I don't know there's a buyer on this screen that's being absorbed, this price could easily go up to the top edge. I don't know that information. So obviously I need to see the buyers being absorbed. Well, that can't be exhaustion then, can it, Reeve? If buyers are being absorbed, that can't be exhaustion. It's got to be a lean, hasn't it? So therefore, I'm basically leaning on the 30 rather than offering the 30. So this becomes a lean trade, correct? Now, obviously, when we come away from this area, so my sell isn't going to be there. My sell is going to be there, for example. So if the buyer keeps coming in and there's no absorption, the price might well be trading 60s. So when the price turns, price me the market now, guys. Price me the market right now. This will be interesting. Now, you should all get this one very accurately. Every single one of you should get this one very accurately. If you don't see the absorb absolutely, you're probably talking about 60 offer. You're going to go into the market at 60 for a sell. Absolutely. So this should be your easiest bidding offer, this one. Price up your bidding offer in this candle, guys. And this might highlight where people are not doing it right. So the challenge is on, guys. Let's price up the candle. Come on, there's a candle here. There's a candle to be traded. Let's see your pricing. Let's see who's going to get the deal done. Let's see what price you're going to get the deal done at. Let's see what you're doing. Price up the market. Sometime soon. Before I die. Before I die of old age. If you can't price this up, guys, you shouldn't be live trading. Put it that way. You should not be live trading if you can't price that candle. And I'm not asking you to be right, guys. I'm just asking you to price it because you've got to do this as an exercise. You've got to do it. If you can't price what's going on, you can't make money trading. If you don't know what's going on, you can't make money trading. The only way you can see it as a trader is if you can price your market accurately. Good stuff. Now the prices are rolling in. And remember, there's only your price. There's only your price. Nobody else's. Whether you're right or whether you're wrong, let's find out. Well, there's a couple of things that now are visible. The first thing that's visible is the fact that price is now trading in the direction of the value. So obviously, if I'm now pricing this, what candle was this candle here? It was a red candle, right? So obviously, I now know that the selling is coming in behind a sell value. So my offer is now basically that price, right? I'm going to offer that price. So I'm probably offering about 10 to 15. Okay, so I'm now offering about 10 to 15 on that deal because I'm now pressing. I'm going to be probably offering 10s, 15s. And obviously the bid should now be clearly off the bottom edges, so I'm just going to leave my bid at 70 at this stage. Because that's what you would do if we were doing the market makers exercise, wouldn't you? Let's just analyze whether that's true, right? So if we've came off a price of 30, right? So the price is opened at 30, and we've came off the price of 30 and we've traded down to say 10, then you're looking at that and you're saying, okay, how am I going to price this? What did you just do as a market maker? You just bought at the bottom of that candle in the market makers game, correct? Because that's what the market makers game is, that you buy the bottom of that candle with whatever volume's coming in. Now, as you buy the bottom of that candle, which is obviously at this point, we're suggesting it's 10. It doesn't make any difference if it's 10 or 15s. You've bought the bottom of that candle. You've now got the sell trade at 30s. So according to Nash, if that's a sell trade at 30 and the buy trade here was at 10, then of course you're now looking at the idea, well, obviously, at that stage, the bid would be 90. You know, obviously I'm just putting 70 because that's where I'm not rising. I'm not lifting my bid price up in towards the price area. I just left it at 70. So at the moment, I would be 10 offered at 90, correct? So I'd go 10 offered, 90 bid. Does everybody agree with that? So we've got 10 coming in, with this price. That's where my offer is going to be. And I'm going to try and sell into that area. And the idea is that the next candle should be the same candle. So there's going to be that opportunity to lean into that sell. So obviously, if I bid at 10, if I got filled at 10, I would want to try and sell 11s and 12s and 13s and 14s and 15s. And then roll it back down towards the 90 and try and go after that bottom edge of liquidity now. Because obviously the bottom edge of liquidity is now in sight. So we would imagine that if the prices came off this balance, that this price is going to be a no-brainer takeout now. And obviously, if it's a no-brainer takeout, it's got to go through that big zero sweep. So we should get a very volatile break of the zeros, right? Very volatile break of the zeros. That's why it's so important to recognize the direction of your value narrative, and it's so important to recognize how close you are to the day high and how close you are to the day low. The closer you get, the more it pulls. Day lows are always there to be broken. Day highs are always there to be broken. That's the whole point. Day highs, there's only one of them in existence. They're a very rare thing. So if you happen to come across the day high It's only going to happen very, very rarely. So obviously they're there to be broken because they are so rare. You know, flimsy, easy to target into. So obviously this is basically the Nash component of trading. If we've got a red candle that goes 30.10, we go red candle that goes 10.90. So I'm going to get aggressive into this trade now. The value is bearish. The structure is bearish. The price is now working hard for me. I'm going to go 10, 15 offered, 70 bid. Does everybody agree with that? Everybody see it? Does everybody now see it if you haven't got those prices? Now, as I said, there isn't a right and a wrong. There isn't a right and a wrong. But obviously, if we were to wait for the 30, what would the 30 bring us? 30 could be okay. 30 might be okay. The challenge you've got at 30 is if it goes a little bit above it, you've just put the POC back upside down again, haven't you? So if you were selling 30, you'd probably rather sell 25 after a rejection of 30. Do you see what I mean? So I'd build a narrative around that. If I sold 30, it would go back above the POC in this one. So I'd rather sell 25s as the POC rejects, as that volume rejects. I'd rather sell below 30 now that we know that the buyers aren't going to take the market bid and take it back up to 60 again. Seller on the way back, if you're going to offer 30, don't offer 30. If you're going to offer 35, don't offer 35. If it's going to do that, wait for it to come off 30, 35, and then sell when it breaks back down the way, because you put the POC back in your favor again. And obviously, it's all about the fact that this is a drawing and we don't actually know where the POC is. But that would be the basic rule of thumb, is to wait for the price to go back offered, which is basically the tipping price, right? So obviously, if the price goes above here, the tipping price is bullish. If the price goes back below here, the tipping price becomes bearish. So that's why selling into this area, 25, 15, 20, 25 area, that would be an acceptable offer. And obviously, the bid should be nowhere near you. The bid should be getting pulled at the bottom edges at this stage. And that's how you start, obviously, trying desperately to price up the market. And obviously, that puts you into the Nash. And if it puts you into the Nash equilibrium, now you're able to recognize very early when the Nash equilibrium is being acted on by what? By some super duper huge fecking size whale sitting on the bid, right? Remember the key to this. There's one massive key. As a short-term trader, you're looking, as a local on a floor of an exchange, for example, as a short-term trader, you're looking to discover where large traders are coming into the marketplace. Knowing where the biggest traders are located, knowing where the biggest deals are going to come in, is effectively your edge to being a trader, is it not? Effectively, knowing where they're going to come in is your edge. Knowing where they're going to come in is your edge. So if you don't know where they're going to come in, or you can't see them coming in, you're giving away the most important edge you have as a trader. So you've either got to know where they're going to come in, or you're going to know that they have came in. It's either or both, preferably obviously both. Oil's a great example. Did you see, did anybody know there was going to be a big seller at 70? Did anybody know there was going to be another big seller on oil at 70? Of course you did. The price went above the POC of the balance, right? The price went above the POC after our exit. It was a perfect exit, by the way, guys. That was crazy. So the price went above the value. And look at where the value is, right? The value is down here. The value is probably around about 86.30. So if the value is 86.30, but we've gone above the POC, we move towards what price? We move towards this pricing area here, don't we? And we obviously think that there's probably a high probability of a commercial sell zone up here, right? So obviously we're looking at that saying, well, this value at that stage still looked good. But obviously, if you look at the size and the speed of that candle and it's now gone bid above the POC, you're saying, well, I'm going to let it go back up to the top edge and then start hammering it for that short value again. And obviously hammering it for that short value means getting that short off the 70s on that absorption. And obviously, you've just rolled another price for another $250 on the sell side trade. Spectacular when you think about it. Really easy when you think about it, because it's just a straight line from the prior high. But the value is massive. Massive value. Crazy good trades. Crazy easy trades. Damn it. It's a pity about that pound, guys. I was looking at that pound. Remember, I had an offer in for sterling. Some feckers came in and you keep thinking Nessie's listening in, guys. Some feckers came in and sold it before we got the. Remember, I had some offers here at the top edges for the pound. Somebody's came in and sold it before we even got the offer, guys. Unbelievable. Unbelievable. Anyway, makes not a matter, because obviously still sell side business making us some monies. Making us some monies. And we love the monies. We do love the monies, guys. So pricing the market, guys, incredibly important that you understand the story. Do it often. Do it every time you're looking at your charts. Price the market. If you can't price the market, how can you possibly put a bid or an offer into the screens? I don't understand that. Does that make sense to everybody? If you can't price the current marketplace, how can you possibly put a bid or an offer onto your screen? You've got to be able to do it, guys.
Order submitted. Order submitted. Order submitted.
Encourage people to put in a two-way price. And the reason why we do that is because it forces you then to have a bias. In other words, your pricing is going to be skewed. So if I start bidding the S&P just now, and I start bidding at 85s, 85s, 95s, obviously I've got an incredibly bullish bias. But I've came up with a price. I've came up with a price that says I would be looking to bid 85s if that's the price that started to show up on my screens. And that's obviously then allowing me to start thinking about A, whether I would buy it
canceled.
85s, and B, am I that bullish? So I start forming an opinion by my pricing of the current marketplace. Right? So when we start thinking about that idea, when we start considering that idea, that concept, we become very sensitive to value changing. We become very sensitive to what the order flow is doing, about whether we're going to get filled at that price because there's a lot of buyers appearing. All of these kind of things we've become very sensitive to simply by doing one exercise. And the exercise is pricing the market properly. And if we price the market properly, well, think about it, guys. That's what we do. How can you possibly, and it goes back to that simple thing, how can you bid for anything if you don't know how to price it? It's a throwaway then, isn't it? It's just a gamble. If you look at going to an auction for a car, how much do you know you're willing to pay for that car? It might be your budget has a certain limit. Let's assume the budget doesn't have a certain limit. But let's assume you approach the car from the point of view of you want to flip the car. It's not because you want to buy it because you've got a big collection of these cars, and this is very rare. Your price is going to be different. But if you want to flip it, how do you price it? Now, a couple of things. You have to look at the current price that's available. You have to look at how much these cars are going for in the open market just now. You have to look at how much work is required on the car that you're about to buy, if any. You have to look at all of those kind of elements, right? So you also have to look at things like the opportunity cost. If I buy this, I can't buy something else that might make me more money. So there's an opportunity cost to this. There might be an interest rate cost to this because you might have to take a loan to buy this one car. You might have some finance on it. So the question you've then got is, what price am I willing to pay for me to buy this car, for me to still be able to make a flip on this of a certain percentage to make it worthwhile? And obviously, if you go
Order
over that, you
submitted.
don't have any discipline as a trader. You're going to lose money probably in the long run because you've overpaid for that car, right? You're going to buy it for
Order
50,000 and you
canceled.
put 20,000 of work into it. It's cost you 70,000 and there's an opportunity cost there of 5. It's now cost you 75 grand. It's now cost you 75 grand. You're going to take a 10 grand loss, right?
Order submitted.
So in other words, you overpaid for the car at the auction, you're going to lose money. Well, trading's exactly the same. If I know what to bid for a market or what to offer for a market, I can make the right decision at the right time. And if the value improves on that car whilst I own it, that's a good thing, right? I might be able to get 100 grand for it. If I own it and I get 100 grand for it, then I'm in absolutely rock solid. But if the value declines when I own that car, if I've got a big enough margin, I'll get my money back out, correct?
Order filled.
A market wasn't clear enough. I maybe have to fix that because my value dropped. I thought it was going to stay bid. So obviously the value dropped. I have to be able to take account of that. I have to be able to work that into my figures. If you can't price your market right now about what's a good bid and what's a good offer, then it comes back to that point. How can you possibly put in a bid or an offer for something? Car, you should bid 50. You're never going to make any money. So there's no point, is there? There's no point unless you can price the market properly. Stay well away from the market. If you don't know what the price of the market on oil just now is, put your offers in at $87.20 and put your bids in at maybe
Order
$86.20.
submitted.
Make it $1,000 wide, right? And then what you now do is you've got to try and bring those bids and offers into play because at the moment, all you're doing is hiding from trading. You're hiding from the trade because you don't know. And that's because you don't know. Well, that's what you're supposed to do. You're supposed to hide from a trade if you don't know, right? You're supposed to not do the trade. But what you should be doing, obviously, is when you're starting to form that opinion, that bid will stay where it is, but the offer will start pressing down, or the bid will start pressing up and the offer will stay where it is. And you start forming an opinion about bidding more aggressively into the rising market or selling more aggressively into the falling market. And that's how you get that pricing
Order
idea.
canceled.
That's how the pricing idea develops and evolves. Yeah. Make sense?
Order filled. 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 Or order filled. Order submitted. Order submitted. Or order filled. Order filled. Order filled. Order order filled. Order filled. Order submitted. Order filled. 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 Order filled.
We'll either be doing orientation starting on the 18th for that week, depending on how much we get done leading up to it, or so we're a couple weeks away. Right now, we're in the working up to it phase.
Order
See where we
filled.
are with everything on the trade log and all of that good stuff. Ray's getting.
Order filled.
Oh, in fact, it's got to be time for him to
Order
break it
filled.
out today.
Order filled. Order. Order submitted. Order submitted. Order submitted. Order submitted. Order. Order submitted. Order submitted. Order filled. Order submitted. Order submitted. Order submitted. Order filled. Order filled. Order canceled. Order filled. Order filled. Order filled. Order submitted.
But yeah, glad to see that Ray's taking a look at it as well.
Order filled. Order submitted. Order submitted. Order filled. Order filled.
It,
Order
oh,
filled.
nice. Well,
Order filled.
I always go back to the guy. This was wait, this goes back to, I think Silver Dave started his run in 2011. We call him Silver Dave for obviously a reason. But it's kind of a cool story because he was a client on the brokerage side. He had taken like 13,000. I don't know what his deal is with 13,000. Probably
Order
had something to
filled.
do with margins.
Order filled.
But he was trading pretty size as it built up, and he did well over $1
Order
million.
filled.
Everybody in the group in our office kept telling him, take some off the
Order
table, take
filled.
some off the table, because he was trading so wild.
Order
And he
filled.
gave it all back, down to 9,000.
Order filled. Order filled.
So he spent a year, maybe a year and a half or so,
Order
just
filled.
working on himself.
Order filled.
Decided he knew how to make money, didn't know how to manage the trades very well.
Order filled.
Came back on the silver run. What do you think he made over the next few years? It's a good one. I think it was 2011 is when his run started. About this time of the year, to be exact. But he took his account
Order filled.
over the next few years. He made
Order
over
filled.
20 some $1 million. Boom. I think there was some really big keys to that, though. His trading money wasn't going to affect his life at all. He had plenty of time. He did this the second time he did, as he was making money, took some off the table. He did find, though, that as his account got bigger, he had to keep changing his trading. And now,
Order
talking about the
canceled.
last 10 years, oh, look at the market. Looking to
Order
roll.
filled.
After 8-10 years, he was making about 3 to 5 million a
Order
year because he
submitted.
found that if he kept his account, for him and his trading style, if he got it over about 5
Order
million,
filled. Order canceled.
he
22s on the S&P, and we've just been helped out at the 3
Order
o'clock data there that
submitted.
came in very hot indeed, and we've seen a nice sell-off down to 79 from that 92 sell price.
Order canceled.
Nice trade, nice outcome. Looking at the value narrative, you can see simply by looking at the rotational value at the moment, you can see where the sell came from. It's not that difficult to spot, is it? Pretty obvious? Sure. Very obvious? Very obvious. So how about this price? What about this price? Well, that's obviously that sell side ledge. We've talked about ledge trading before,
Order
this idea
canceled.
of finding those little edges on your profile. So you draw on your profile and obviously it brings up an edge. And if you put your price into that edge itself, you start looking for that price area. If the market's bearish, you know that you want to start pricing up a little bit more aggressively. So when the
Order
value is
submitted.
rising, there's no point. But when the value starts topping out and diverging on a macro and we're in that price area, I'm looking now to get that short sell onto my books. And obviously with the value diverging going into the data like this, then I want to be working that offer again.
Order canceled. Order canceled.
Data, and we've
Order
obviously now traded
submitted.
76 on the downswing. The value line is the Warren line. It's XLY, XLK, XLU, XLP. So it's the rotations, which is one of our best short-term lines that we've got. It's very fast. It's very accurate. And, we can use this pretty much every day. It doesn't take any interpretation. There's no reason why this line would go opposite to the underlying equity markets. There's other reasons why other lines might go opposite, but there's no reason why this line will ever go opposite. After all, that line is the equity markets. It's not a detached line like yen against the bond, for example, is an outside market. When we look at the volatility narrative, there wasn't really anything for me on this so far today. There's not been any strong storylines about tops or bottoms, so that's why I've been kind of avoiding the volatility at this stage. I've been working more on this storyline. It shouldn't be lost on anybody. First of all, what direction is the market going in? Well, we obviously can zoom out of our charts a little bit to find out what direction the market's going in. And if we zoom out long enough, you'll see that the market is very bearish, right? You're selling at lower highs and you're buying at lower lows. So we've already got that idea that the idea is that we are under the VWAP, right? Definitely under the VWAP. want to be long at the
Order
lower bottom
submitted.
edges. So you might say this was a little bit cheeky. Yeah, I get it, but that's where we got the edge from in the background. And there was a bit of value divergence creeping in at that stage. So if I bring this profile into view, sorry, I've taken it too far. If I bring the profile into view, you'll be able to recognize that if I just take it into the bottom edges here, you'll be able to recognize that we got this very obvious edge coming in here at 85.5, right? So I just took that edge, and obviously that's what this box is here. That's that edge. So obviously if the market was going to go bullish, this would be a price that I'd be interested in buying if the value was divergent. So I'd be interested in bidding for this. So we can start looking for those trade areas. We've now got some ideas. Now, the interesting thing about this area here was that I got a max dispersion trade. The max dispersion trade was up here, so my job was obviously to find where the max dispersion trade could be bid for. Remember, max dispersion trade doesn't mean it's a buy trade. It just means we're going to be looking for that max dispersion.
Order
And
canceled.
we're going to try and find our way into that, and we're not going to try and chase it. Remember, if the market's selling, if we're trying to bid, we're always going to bid it at new lows or information. So when we've got a lot of micro information here, we're obviously now recognizing that storyline unfolding in the background, the short term, the long term narrative unfolding in the background. When we recognize that short term, long term narrative, we also have market internals like the tick, for example. If the tick is rising, I'd rather be buying. If the tick is falling, I'd rather be selling. Does everybody agree with that? Yeah? I'd rather be selling. So we understand the tick. Now, the problem with a lot of people with the tick is what? It's too jumpy. It jumps all over the place. There's no real storyline to the tick. And obviously, we have this idea of buy-side and sell-side programs. But let's just go back to the basics of the tick. Go back to the basics of the prem. If they're going up, both of them, if they're both going up, generally, if the price is agreeing, then it's bullish. If they're both going down and the price is agreeing, then generally it's bearish. It's dead easy. So we look at that as a storyline. So if we want to look at that as a storyline, if I put the tick on top, but I don't put the tick on top, I'm doing a MACD of the tick. And the only reason I'm doing that is to smooth out the movement, right? If I look at the MACD of the tick, does anybody see the divergence when sorry, not the tick, the prem. Does anybody see a significant divergence keep it coming into the prem here? When the value starts to go up here. Do you see that difference starting to show up when the value was bullish as well? So when we're retesting into the bottom edge here, we're now not seeing any new selling coming in. So there's this idea that this should be a buy trade. Into the top edge, you can see actually it's short. You can see the prem is actually short net here. So obviously into the bottom edge here, the prem is actually net long here. So you can see that the buy trade has got this massive divergence. The buy trade here has a green prem, and the sell trade here has a red prem. So you get this idea that you can use this on a macro chart basis just as much as you can use it on a micro to see that underlying flow of prices. Because obviously if the S&P is constantly running at a premium to the stock market, and I'm talking about a higher high narrative, then of course that means that there's a lot of buyers in the futures. I don't want to sell against that. I want to be, so long as the price understands that, so long as the price is agreeing with that, I want to go along with it. I want to get a better play on that one, right? So when we understand that as an overall view, you want to try and line these up with your value as well. That's always a useful thing to do. What else can you do? Swing points. There's a lot of swing point liquidity ideas on your trading view terminals if you want to use them. I found this one called swing points, interestingly enough. And all these swing points are just highlighting the bracket area. It's almost like a minus development kind of idea in the background. And all it does is it finds the lows and it finds the highs. And it just draws a box until it takes the level out. Yeah. So all we're doing then is we're looking into buying when the price goes below one of these green line areas if the value is rising. So it goes below the green line area here, goes below the green line area here, we buy it. When you can see that this line starts to diverge here, all I'm looking to do is sell into that red box at the top edge. And obviously that red box at the top edge comes from that point, which gave you an easy money sell there. And it comes into an interesting edge here, which is always what we talked about as well. And that wasn't diverging. That was still pretty bullish at that stage. You've got to be careful when it does hold around that area for a while before it really drops out. And then we get this big sell-off into that narrative. And obviously that narrative gave you that big drop. And then obviously you can see a very bullish bottom edge forming in here. And that price starts to jam into the bottom prints here. We haven't seen any value flip yet. So whilst we're aware that this is going bullish, we want to bag some monies. Just take some monies and walk away at that stage. Take some monies and walk away at that stage.
Order filled.
And all we're looking for is something that shows up in these areas. The prem as a histogram is you just put the MACD on so you just go to your prem, add an indicator to your prem, and just do it as a MACD, and then obviously make it a lot smoother. So the settings on the MACD is just a standard MACD. The settings on the MACD is just a lot higher here, so it's 3540. So we're really, really smoothing it out here. And the only reason we're smoothing it out is to get that macro view of whether the prem as a rule is bullish or bearish. As a rule, whether the prem is bullish or bearish. So we smooth it out because we're purposely smoothing it out. It's not a trigger system
Order
for us.
submitted.
It's an idea of whether there's selling pressure or buying pressure coming into those price areas. Right? So we're not using it in the normal context. We're using it in a slightly different context. Yeah. So got us a nice trade, got us a nice outcome, and we're quite happy with that as a set of trades. Now, obviously, this idea of pricing the market, the good thing is that when you've got these green and red boxes, it provides you actually with some bids and offers, doesn't it? You see that? It provides me with some bids and offer areas that I might be interested in dealing and I might be interested in getting a bit of business done. It gives me some areas that I could potentially contemplate as a bid and offer if I didn't know anything else. So if I'm looking at this, I've got a bid here at the moment at 76.5 and I've got an offer here at 80, right? So it shows me some 76.5 and 80s. You see that? So we can obviously see how it's evolving. You know, it shows obviously that this pivot's now formed. It's obviously a hindsight thing. It doesn't make any difference. And you can tell whether you want to be trading these pivots. And obviously, if we add a value line to that, then of course it starts to show me that if the value then starts dropping, then this price becomes a relevant offer at the moment, right? So if the value is dropping, then this offer here at 79, which is now the last seller coming in, that 79 becomes a possible sell. Now, this is obviously a very basic look at the shape of pivots, but obviously you can see an example in here. You started to see the value dropping. It came up into this level here at around about 78.25. You can see the value is still bearish. And you start looking for the absorption. You start looking for that trade, right? So there's a big volume trade right there. So that looks like somebody now selling it. So that could be your sell. You can then say, right, I found a buyer. I found a buyer getting trapped on this trade here. That's going to be my short sell there.
Order submitted.
You see how we can use that process? It's in the right area. It's got the right value. It's got the evidence of the seller coming in. So you're going to lean against that seller and join in with the process now. And obviously that seller is obviously a sell-off of that price was about 80. And the price has dropped down to 75, $250. Very nice indeed, right? Very nice indeed. Thank you very much. But at the end of the day, all it's doing is the things you would do automatically anyway. It's drawing in level ones for you, correct? That's all it's doing is drawing in level ones. Well, you know there's a level one here. You don't have to wait for that thing to draw in a level one 20 candles later. You know there's a level one here. You know there's a level one here. So you don't have to wait for that to draw in a level one at that point. Right? So you can obviously draw in whatever you're looking for in any of these areas. The only thing it doesn't show, of course, is where your edge is. Where did the seller come in? Not where the pivot was, but where did the seller come in this trade? And obviously, if you're looking for where the seller came in this trade, you can obviously look into very, very much into your profile narratives and find where that seller is visible. So let's see how the trade log has been looking at that stage. Let's see if the trade log was looking for anything in particular at that point. So we go back to the beginning of the day again, or go back to that first trade that we had, which was this 1440 buy trade. And if we look at the 1440 buy trade, we can see that the market maker started to add bids into discounts. Okay, so that was the first strong buy trigger. The market maker is adding bids into discounts below at 1440.
Order
Well, discounts
canceled.
below at 1440, you can see where the price level was. There it is right there. 20 seconds later, we get the low price, right? 20 seconds later, we get the low price. Now, did we want to bid it at that low price? Yes or no? 20 seconds after that message, 20 seconds after that market maker adding bids, did we want to bid the low price? Yes or no? Sure, because the value is going up. You see that? The value is rising. So why would you not want to bid the low price? You're not bidding at higher prices. You're actually physically bidding the low price. So you now have the right price. You're now doing the right things at the right areas. You're now trying to take advantage of that move off that 84 print. And obviously at that stage, we went 84s to a high price of 94s for $500. A very fast trade. It took me 6 minutes to make that $500. And we obviously were beautiful, beautiful, beautiful bit of business there, right? So then we started to see some momentum sells. That wouldn't be a surprising trade. That never broke back sell side at that stage, so we were quite happy. So obviously what we started to see was we got this max dispersion trade at 1446. Well, max dispersion trade at 1446, I'm going to look for where that bid might come in. And obviously we've got that edge here. So if I'm going to bid it, I'm either going to bid it against that edge at 1446, right? So there's 1446. I'm going to bid the edge. Or I'm going to try and get back to the bottom edge here and I'll bid into this area here. Well, we have to get the edge. We take the edge trade here, we go bid, and that's a max dispersion trade right there. See how we've got to know this? Because if we simply just started to bid it at 1446, you could have been bidding away up here at 90s. Well, how can I bid at 90s in a red market? How can I bid at 90s in a market that is below the VWAP, it's below the RGL? How can I bid at 90s? I've got to let it drop till I can get into a real value price to bid into, right? We know this because we know that that's where we need to, as a minimum, achieve as a buyer. We can't be too aggressive into this bit of business, can we? We're going to get ourselves found out badly on these bits of business. So the price rallies, and we're obviously now looking at that divergence for the sell. We're coming back up into these key areas. We're looking at that as a storyline, and obviously as we go up into those areas, you can obviously start recognizing as we move into 1452s, we start seeing a lot of sell triggers coming in here. So you can see that we're getting these futures offers into the dispersion desks. So this is the basic minimum entry at 1451s, 1452s. There's 1452s. We're coming up into that edge. We're coming up into that cash market open. And I like the idea of getting busy on that short sell. I like the idea of starting to work now on that sell trade. And obviously that sell came in and we got a very, very, very nice response all the way down to this diverging storyline at the bottom edges here. And, you know, it doesn't matter what else comes up. I wouldn't be interested in anything else unless it said sell attached to it. So sell programs I'd be interested in from that point, because I've not got any value to be a buyer. I've not got any value to be a buyer. I am only interested in selling. So it doesn't matter what this finds. I am only looking to sell into whatever sell triggers we get. So we get a sell program kicking off at 1854. Let's find it. So let's find the sell program, 1853. There's 1854 right there. So where's the sell program likely to be? It's likely to be that price right there, correct? So we get a sell program, a momentum volatility trade, an HFT sell program coming in line with value, in line with the red side. And that's where the sell kicks off. And we get that nice sell momentum drive as the price sells off. Remember, we're selling at lower prices, not higher. S&P buy programs, not interested. Not interested. Why would I be interested when I'm sell this side market? The value is bearish because I would never be able to buy it anyway. The value is bearish. I'd never be able to buy it. A sell program, I'm interested in this, 1858. So 1858, there's 57s. So 1858, obviously the sell program is going to be a break of that little balance area. you're going to be looking at 1858. So there's 1859 just coming onto your screens there. And you've just broken that little balance area there. So that's like the candle reversal on a higher time frame. There's your sell trade. Value looks fantastic. And it's just before 1458. It's just before the data comes out, right? We get an HFT sell program kicking off at that point. Absolutely superb. And obviously that gave us the momentum swing away from that price, which was fabulous. Max hedge, max buy trade at 1502s. Obviously, just after the data comes in, there's 1502s coming in just there. So obviously that's where I exited the trade. So you see that max dispersion trade? You see it wasn't a buy for me. It was an exit. You see the timing? You see the timing on it? Turned out to be almost the bottom tick price, right? Max dispersion trade, the max dispersion trade, it's the bid trade. So obviously we don't have any price level down here. All we've got is this idea. But what is important about this price? Why is that an exit, guys? Why was that an exit for you guys as well?
Order submitted.
Why was that an exit for all of you guys as well? Should be pretty obvious, right? Swing low, swing high.
Order canceled.
Yeah, so you've obviously got the idea
Order
that we're
filled.
moving into that measured area. And all you had to do was obviously recognize that it moved out of this balance area here, which obviously is now that change of behavior level that we now have in the background against this price area here. Okay, so we've got that 50 line, we've got that change of behavior pricing. And we've got the measure into that max dispersion trade. So obviously, if you're looking at that from a dispersion narrative point of view, then of course you may well have decided to go after it. But you obviously
Order submitted.
Understand you are buying a low and a substantial low at that stage. It's not a guaranteed discount price. So my job is to be short selling into that bottom edge to see how far they want to take it, see how far they want to take it. I don't really want to be buy side. I want to be sell side. So we got a max strong bid coming in. We then got these dispersion hedgers coming on buy side as well very shortly afterwards at 1504. So obviously that bid is coming in here into the prior lows. So you'd imagine if you wanted to buy it, there's plenty of evidence, but the value doesn't tell me to buy it. So I'm not going to buy it, right? There's plenty of evidence coming from this, but I don't want to buy it. They got it right. I still don't want to buy it. The trade was still correct, but I still don't want to buy it because the value says sell. If you're going to buy it, this would have probably been your only chance because obviously that value flattened out before the drop. Might have been enough for you to buy into the new low price. Maybe not. 1506, 1507 tells me the same story, which is obviously this is this 1506, 1507 buy trade. So it tells me that the same story keeps building on this. The same trade keeps building. Sorry, guys, I'm short oil and I'm bagging some monies. I sold just above 87. Did anybody join me on that short sale at 87s? Made a few grand on that one, guys. Made a few grand on that one. That was nice. So got a short back into the top edges. Why? Let's take a look. So we got, we started to see this storyline unfolding. We started to see again max dispersion bids again at 1510. So there's 1510. So where's your bids? Well, worst case scenario, you know where your bids is because you can see where the green box is, right? So you would imagine that the max dispersion bids are at that price there, wouldn't you? It's not really hidden. I mean, it's just a day low, isn't it? It's going to be where your bids are located. So you're going to be watching for those bidders into that bottom edge. I still don't see any value to be the buyer, but we're still getting that max idea that they want to buy this bottom edge. We then see a program buy trade coming in, but again, I don't want to be buying it. I want to be selling it at this stage. I want to be selling it at this stage, so I'm not really interested. Option dispersion, bidders into the low price at 1515. Well, there's 1513, there's 1514, and there's 1515. Same dispersion buy trade. Still don't want to really be in it, so I'm letting it go. We'll go back up to the next paycheck. So there was obviously a paycheck liquidity forming here, yeah? And the good thing about this one is that, see these little areas? Do you see how the paycheck forms? Because when they overlap, it gives you this deeper color. That's one of the reasons I really like this little indicator, just as a throwaway, right? because you can obviously see paycheck, because obviously the color gets darker when you move into paycheck, right? So when you move into paycheck, it gets darker. Dispersion bids, that was the 16. So basically the same trade at the bottom edge, still not anything of any interest there. Offers, okay, so we're starting
Order
to see
submitted. Order.
coming
Order
in the bottom,
canceled.
okay? 18, 15, 18. So there's 16, 15, 17, 15, 18. So there's the offers now coming in, right? See how we're getting those dispersion offers right into that level 2 liquidity? Do you see that? So we're running into that paycheck. And at the same time as we're running into that paycheck, 15, 18, futures offers, dispersion offers. So we've now got those offers coming in. We've now got that evidence to go with the sell. Now, we lost a little bit of value there, but we never gave it up. I mean, we lost a little bit of value, but we're obviously still VWAP sell. We're still market sell. The market day low is still a lot closer than the market day high. So we would rather sell it. Now, it came back up and gave us a little bit of a fright. You know, if you're looking at the idea there, obviously we started to see this big dispersion trade coming in at 21. You know, that's obviously into this price, but at that stage there, your bids are still below you here into this level. So you're not going to be doing anything with that for the time being. All you know is that your bids are now starting to come back in again at this price area here. So you put your bids in and you wait for that to happen. If the price then stays bid, you start looking to buy into the low now that the value is starting to turn back up again. Futures bids 15.22, futures bids 15.23, max again at 15.23. So we're starting to think that this could be a reality. We still have the bids in place. We're still looking for those bids. We're still looking for those absorptions. We want to be lower than this line because this is still the idea. We want to be lower preferably than this line because this is the day low. We want to be into the day low, right? If we're going to buy it, we want to be in there. Futures bids, futures bids, futures bids, futures bids, futures bids, futures bids. Okay, so there's the second level of quality coming in at 15.25. So we've now ran the sweep at that price. And at 15.25, we get the second strongest bid narrative on the dispersion trade. I like that buy trade now. I like the idea of that buy trade because it's now got the price that we're looking for, the price that we are bidding for that move. Now, as it turns out, it got jammed against this edge. It's been jammed here, of course, and the sellers have come in off the 76s. And that's obviously just a little bit of a pity, isn't it? It's a little bit of a pity at that stage. And that's us up to date. The thing that's missing at the moment is we haven't added to the picture at the bottom edge yet. I like the value now. I like the shape of the value, but that's my S&P trade so far from that trade log. Make sense? So the idea of using volatility, the idea of using edges, ledges, the idea of using values, the idea of recognizing the VWAP, the idea of recognizing the RGLs has allowed you to predominantly stay short, to predominantly press the buyers at the bottom edge, to predominantly keep pushing them over and over and over again. And because of that, we just let it go as far as we can possibly let it go. We don't try and intervene. We don't try and buy at higher prices. We just keep pressing it as much as we can. And you can see that that's worked because that last buy trade made some money. We haven't bought it since, and the price is now sold off beautifully. Value is still very divergent. So we look for the next bid coming in, right? We wait for the next bid coming in. We're not seeing it. We're not seeing it, are we? You see how easy it is? Beautiful. And that sell on oil is doing well. We went from that high price of 87s down to a low price of 86.60s. A nice little easy $350 unis for anybody that went into that little measure. And it was a measure, of course. It was a guaranteed premium price, as you know. So a little guaranteed premium price, always good to sell into if we can get that absorption print working for us. If you want to know what these blocks are, it's a little indicator by Leviathan, called swing points and liquidity. Swing points and liquidity basically just shows the pivot 10 candles or something later. The only reason it's there is because it can show paycheck in quite a nice forum, because it overlaps these pivots, so it creates that darker color. When you get the darker color, of course, that's the big paycheck liquidity. So it's quite useful for that if you're interested in using paycheck for any reason, especially if you're selling at lower prices and you
Order
get paycheck.
submitted.
That's the perfect example then of a spring trade here, isn't it?
Order canceled.
So you've got the perfect example of a swing trade there. So that nice little press off of 80s, eventually trading down at 70s. Unfortunately, we closed off that when we bought it at 73s. That's okay. We made money on the swing higher anyway, so it's just an offset. Nice. And obviously inside of that, you've obviously got things like your aggregation candles. You've got your aggregations coming in at any point in the screens. You've obviously got your prems, you've got your values, you've got your volatilities, you've got all your other elements that you might fancy doing some business on, and you've obviously got your ags in here. So when you get an ag candle, you know that with value coming in, so you see how the prem's gone bullish here. So with the prem going bullish and you get that big ag, you would imagine somebody somewhere is now going to buy some stock here, because that would be a stock buy program at that stage. So you're obviously going to be looking at that and saying, you know what, that volume looks really, really, really quite
Order
useful.
filled. Order filled.
That's how you're using it. If that's how you're using it.
Order
so obviously
filled.
During this phase here, you're not going to try and sell it. Sorry, if during this phase you're not going to try and buy it. During this phase, you are going to try and buy it to rotate it
Order
back up again
filled.
at that stage. And you tie that storyline in with everything else, and you can see that they're now trying to push this price back down again. And you watch to see if the price agrees with that narrative. And if it doesn't, then we can obviously see it using it back up again. But it's always better to buy when the pressure's off than it is to buy when the pressure's
Order
on, of
submitted.
course, at that stage. But it depends upon what the other value's doing. Yeah.
Order
Depends what the other
submitted.
value's doing at that stage.
Order submitted.
The value line in the background is the
Order
Warren line
submitted.
or the growth line or whatever you want to call it. It's XLY XLK divided by XLU XLP. So it's basically just a rotation between discretionaries and tech versus utilities and staples. It's a very good standard line to have in the background, which is not directly connected, but is obviously very closely connected to equities. It's not directly connected in as much as it's not a market internal for, for the tick, for example, or the prem, but it is a market breadth indicator, in some respects, where the breadth is going into the markets on the buy side and where the breadth is going in on the sell side. And because of that, it gives you some very, very nice signals to kind of lean against if you're using it.
Order filled. Order filled. Order canceled. Order filled. Order filled.
So you can obviously see that the S&P didn't really like that 54.5 print on the ISM services, did they?
Order submitted.
A little bit too hot for their liking, wasn't it?
Order submitted.
A little bit too hot. Powell's wringing his hands, thinking to himself, yeah, well, here we go. Another 50 basis points possible, guys. Let's start talking about it. 50 more basis points. Let's see if we can get this equity price back down to 44 handle again. Did you see where a bond went to, by the way, guys? What price did I give you for a target price on bonds?
Order submitted. Order filled.
It wasn't good. It was kind of spectacular.
Order filled.
16s to 20s, yeah? 16s to 20s. Does anybody remember we gave you the target price of 16s to 20s on the measure?
Order submitted.
Nobody? Oh, well. Well,
Order
in the London
filled.
session, I thought I was giving everybody a target price for their bond longs. We obviously wanted to be long bonds. That's pretty obvious. We had this idea that we wanted to be long bond. I think last night I tweeted it. Yes, we did. Okay, so here's my tweet last night with my 16 likes. Unbelievable for bonds, eh? It's a new world record. Get the basics right. Bonds was a stroll today, and it really was a stroll today, just following the curve, wasn't it? We talked about that in classroom, actually, just following the curve. Buy into the close at the lows, very obvious. The curve was going nuts, gave us a very strong buy opportunity. Buy into the
Order
close,
submitted.
and so we need to be passive and bid the sweeps lower, bid the sweeps lower, okay? Now, obviously, the reason why we're bidding the sweeps lower was because this market is quite clearly in a
Order
sell
canceled.
market. There's a dead obvious clue, right? If the market's in a sell market below the VWAP, then we bid the low edges unless we get really aggressive into big volume commercial trade areas like the cash opens, for example. I'm currently long and probably bidding more on dips. Currently long and bidding more on dips, right?
Order submitted. Order submitted.
Yeah. So you can see that that idea of bidding more on dips wasn't lost on anybody this morning, because obviously what happened was at 8 o'clock this morning, we got the dip into the prior low, right? And the curve was still very bullish indeed. We got the bid on the dip.
Order
We had the cap
canceled.
seller, and we had a measured move. Measured move at 16s. We're buying off the 20s. We're a shade shy of $1,000, which is absolutely do dandy. In the background, we can see that we broke structure here, and that's around about that 20 print as well. So we've got a lot of evidence about this trade happening. We've got a lot of evidence about this trade going on, right? So we're in good shape. We're in very good shape, okay? So what did we say about bonds this afternoon? At 10:54 this morning, macro is still bidding dips. 10:54 a.m. We're still bidding dips. Only 12 likes this time, so everybody's getting bored with that sell trade, of course. Sorry, the buy trade. So 10:54, 10:54, guys, is this area here. Right, so there's 11. So we bought again on this edge. We bought again on this edge because we were telling everybody we're buying dips. There's 10:54s, just in that balance, right? So we're getting into a buy trade there again. And obviously we've got a target price of 16s. We gave that target price out to everybody today. We said don't see any reason why we shouldn't get 16s. Everybody heard me that this morning. We got another edge to buy into there, and we got another edge to buy the exact same price on the retest. We are still bidding dips. Look at the value line exploding north, guys. We are bidding dips into edges. Two more buys, and then, of course, what happened was we got one final dip. This was our next edge we bought into here at 8s. Target price of 16 is now on the horizon and looking good. Looking good. We obviously got our top edge target price at 16s. We closed off our positions, and we were in pretty good shape. Now, it didn't stop there. Why did it not stop there? Well, because we got a certain thing happening at the spike on the data, right? We got a certain spike happening on the data. So the price completely collapsed off of that level. And obviously we got all the way down into the bottom edge at 1500 hours. Now look at the value on that, guys. The value's exploded. You see it? The value's exploded for a buy trade here, does it not? But Reeves kicking himself now. Look at the size of the value. Look at the value compared to the last time we bought that trade. Look at the short-term value and tell me if there was any value on that data, guys. Yeah, what do you think? Any short-term value on that data? Do you think there was? Any curve value on that short-term data? Any knowledge about this 20 price area? Any thoughts about that massive volume? Any ideas about what's going on here? It's just nuts, isn't it? Absolutely nuts. And what happened? Of course, the price just rallied beautifully off the 20s back to the 10s. Unbelievable. And what are we doing? We're still bidding dips. We're still
Order
bidding
submitted.
dips. So there's my bond trades today. Buy side, buy side, buy side, buy side, buy side, buy side, which lines up interestingly enough with all the buy side tweets. All the buy side tweets, there were two of them. It lines up with the two buy side tweets that we sent out from last night and again this morning. It's pretty good, right? It's pretty good.
Order cancelled.
Does it line up with the dollar?
Order submitted.
Well, for the most part, yes, it did. For the most part, the yen was giving us a lead into this as a storyline. You know, we never regained any value against the yen into that, which was a little bit disappointing. And subsequently, there seems to be a bit of a problem brewing. Yen seems bearish, whereas the curve seems to be pointing to higher bond prices. So we have a problem child brewing here. This could opportunity. That's a new one. This could lead to an opportunity of bidding some cheap yen at some stage, with the opportunity that we may have to take a hedge against the bond if we need to. But at least it looks on the face of it to be a possible play on yen longs at the moment. Now, one of the things we asked everybody this morning was about gold and how cheap gold was. Take a look at the value, right? See if you can spot any discounts on gold. This will be a hard one for most of you. This will be really hard for most of you. See if you can spot any discounts on gold. Let me take you into that trade this morning. Can any look at it? 1, 2, 3, 4 retests of the low price when the bond's already rocking to the upside. What? $500 for nothing, guys. Literally $500 for nothing after getting
Order
long gold,
cancelled.
after getting long bonds. The gold price is running a low print. Unbelievable. Unbelievable. So we just had to mop up all that selling on gold and then rattle a quick $500 into our bank account later on. Spectacular easy money trade. Since then, of course, we had a big divergence after the big sweep here. The gold prices collapsed in line with that yen storyline. And obviously that's going to be now something we're going to have to just interpret and analyze that collapse. But that's on the back of that yen storyline, remember. So the yen collapsed here. So if I see the yen diverging against gold, of course, the trade will be a buy on cheap gold. The trade will be a buy on cheap gold. I saw an article, actually. I didn't get a chance to read the article. I've been working all day. But somebody was talking about a declared war on gold prices by the Biden administration for some reason. I haven't actually seen any of that, so I'm going to be curious to know what the angle is on that story and who the writer is. But seems as if there was some sort of connection to the gold price with the Biden administration. So I'll be curious to know what that story is all about and see if it makes any kind of level of sense. Anybody take the edge sell on the oil at 86s, 85s? Did anybody go for the edge? Hopefully everybody did, because obviously that's the classroom again, isn't it? I hope people use the stuff we teach in class. We don't teach it just to fill in the space, guys. We teach it because it's useful. Yeah, sometimes we put in a space filler because it's a fundamental or something like that. You can't really use it. It's just market knowledge. But on this occasion, it was useful stuff. And if you were using the edge concept, of course, this edge was not hidden from view on oil. The value was obviously bearish. We can see the value is bearish. We've got to be careful with it because obviously we're looking at it from that short-term view is quite bullish overall. So got to be careful. But if we lose control of 92, the market goes up, right? So the fact is that the price started to pin off the 87. So we're looking at that absorption into the 87s. The value looks really divergent on this, really divergent against that balance in the background. And the sell looks really easy. So we want to press that short sell away from the 80s and obviously go back after this prior low here around about the 20s. So obviously that's your target price. The pivot price is obviously here at the moment at 34, and your target price in the big picture is obviously going to be this price around about the 15s. Sell side business guys going after those two prices here and here. If you're pricing the market at the moment, 75 high, the low price there was about 60, so you're 15 ticks off that. You're looking at a 35 bid. At the moment, the price is trading at 47s. So obviously, 75 down to 60, 15 ticks, 15 ticks off of that, obviously, 60. So obviously it's 45 at the moment bid, 45 at the moment for the possible market maker buy. And obviously you just keep your bidding and your offering coming into the markets in terms of your Nash equilibrium. So a fantastic little absorption here at 85s. You're obviously going to be looking for that as a bit of business perhaps on your charts and trying to get the press away from that absorption against that edge. Remember, you don't want to go above a POC. Go above the POC here at 92s. You go through the top edge here at 12s. So the importance of the sellers connecting below here is very, very, very strong. And if we can see it, we can deal it. If we know it, we can sell it. That's what we've got to try and do, guys. We've got to get into these markets and start bidding and offering properly based on the current pricings. Brutal. Brutal, 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 brutal. Obviously, taking the market offered against the wholesale price today at 95. We did give a warning about this morning, didn't we? Yeah? No? I sometimes wonder. I sometimes wonder if I'm losing my mind in the London session. Okay, so in the London session, I suggested that if we held below 44.95, 45 handle here, that the market would probably be bearish down to 44.60. Pretty sure I did mention it. Pretty sure we talked about it. And as I said, I think I sometimes lose my mind in London, so maybe not. Anyway, regardless, you've obviously got that information if you were obviously using the tweets. 44.95 offered, bid at 44.60. It's on your screens. Offers at 44.95, the bid's at 44.60. It gives you the bracket, it gives you the bids and the offer prices. So obviously when you see the S&P coming off 44.95, you now know that the current dealer's bid is 44.60. So that allows you to consider what's going on. Of course it does.
We're almost, it's almost time for class. About 11 minutes. Don't forget this afternoon we do have a session over in another room, 3 o'clock. Where he's going to cover pricing the markets. Send your friends. You're invited as well. Guess I picked up some nice trades.
Order canceled. Order submitted.
I think that 60 was a good target, wasn't it? And shh, we won't tell Ray that he really is losing his mind. But aren't we all? Anyway, happy Wednesday, guys. About just a few minutes away from class.
Order submitted.
Reeve, you're on it, getting those good trades.
Order canceled.
Mike, enjoy the rest of the week. Ooh, nice. The Eagles in the garden. That'll be fun. Enjoy, enjoy. Oh, there you go. All the good bands, right? enjoy. Safe travels. Have fun, have fun. Guys, don't forget we do have a session this afternoon, 3 o'clock Eastern. And as we know, many times Ray is in there a little bit early. Ooh, looks like. Who's seeing class stuff? Look at you, Reeve.
All right, guys, let's carry on with this subject today. As you know, we like to keep
Order
going with
submitted.
one of the subjects that we've just covered so that everybody starts using the stuff instead of just passing it by, because it's made us a huge amount of money today, a huge amount of money by going with the flow. How important did we make it yesterday that you went with the flow? How important did we ask you to put it front and center of your trading by going with the flow? And has that paid off massively if you've been selling the S&P today? Has it paid off massively if you've been able to get those bonds today? Has it paid off massively if you've been able to get that oil trade today? The answer is yes, 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 and a little bit more yes, right? So are you starting to get it? Try and go with the flow. In other words, pricing the market is incredibly valuable. Everybody does it. Mike does it. Mike maybe has his own style. He has his own way of pricing them. Everybody's got their own way. There isn't one way of pricing the market, guys. That's why when we ask you to price the market, there isn't an answer. There's only your answer. There's only Mike's answer. There's only my answer. It's up to you how you price the market. But the point is, you've got to do it. Otherwise, you can't ever be a trader, right? You can't ever be a buyer if you don't know what the price is you're going to bid at. You can't be a seller if there isn't a price you're willing to sell at. So how can you possibly trade? It's impossible. So pricing the market becomes one of these key skills that we start recognizing, and then the idea of why we do it in the first place and how we start helping ourselves to some of that pricing during the course of a trading day. Well, obviously, we've just talked about this oil trade this morning, this idea of the why this oil trade was such a good short sell. Now, obviously, it's had its ins and it's had its outs. It's actually recovered quite substantially back to that prior high, but that's okay. We were looking at the oil price this morning in London, and we were asking these very specific questions without price being on the charts, and with you needing to try and make a move by 8 o'clock this morning, right? Because remember, that's what's important is you're needing, you're wanting, you're desperately wanting. Now, you don't just do that because you need to be in a trade. You do it because you've got an idea about what the trade is. You want to try and be in a trade in this area or beforehand, right? That's what we always talk about, this idea of being in the trade for the volatility.
Order
Being in the trade
submitted.
if you think there's going to be a volatility story. And a volatility story is, of course, not a rotational story. A volatility story is a story that is likely to do what? Extend the prior move, correct? That's where volatility comes from. If the price rotates, it's not a volatility story, it's a rotation, it's a drop in volatility, right? So several cash opens will feel like rotation. When we get into a cash open, we'll kind
Order
of get that
canceled.
feeling of rotation coming into the markets, and therefore we simply start bidding the lows and offering the highs. We do that exercise that we did before where you simply put your offer above the top edge and you put your bids below the bottom edge, and you say, right, I'll wait till I see what's going on here. And if I get a bottom edge buy, I'm happy to get a bottom edge buy. Value seems mid-priced. I'm happy to bid the low price at the moment. So you bid the sweep, you bid the flush, and you sell the sweep and you sell the flush. But when we look at this chart, we don't have price on it. You don't know what price is doing. All you've got is a value line. That's all you have on that screen is a value line. Now, one of the keys to the value line is if we've got orange above red, the value is bearish. If orange is below red, the value is bullish. Understand? So if the orange line is above red, the value is bearish. Now, when we come into today's business, I'm obviously recognizing a couple of things. Number one, I'm recognizing when I want to make a decision. I want to make a decision by this point here, right? I want to make a decision in this space to the left-hand side. Number two,
Order
I can recognize
submitted.
from the background that orange is above red. I have a supply market. I recognize in this little area here, just before the open, orange is above a flat red line. I have a supply market. What else do I notice? I also notice that the market is going from top left to bottom right. Doesn't matter if I draw a red line through it, it's probably looks something like that, correct? I don't think anybody could look at that and say I've got a bullish market, unless, of course, the price was massively lower and that we're getting a guaranteed discount price. So at this stage here, I'm looking at a market that I want to heavily sell into. Heavily sell into. Now, it would actually be better for me as a volatility seller to be at the nearer the bottom edge, would it not? And this is what a lot of traders don't get. A lot of traders don't understand this, that it's actually better for me if I'm going to trade the volatility to be near that bottom edge price. Because if I'm near the top edge price, that means what? That means that the buyers are probably in control at the moment. That means that I might have to run some stops. I might have to run a sweep. I might have to absorb. It's probably going to take me the first hour of trading to get short into this. First hour of trading. So obviously, if it's going to take the first hour of trading, then it's obviously going to be one of these long, drawn-out affairs that we often get on any markets when we're trying to sell a top edge or buy a bottom edge. But we're not trying to sell a top edge or buy a bottom edge. We're selling the ledge. We're actually selling the ledge trade. And we started to work our way through this ledge itself, and we started to ask those very obvious but incredibly important questions. Where is the ledge? Where is the ledge opportunity? Where am I looking to try and get that lean narrative from? So this is an incredibly important part of the process that we've been trying to get you guys to adopt in the last few days. We asked the question this morning, how do you find the ledge? How do you find these areas where you're willing to deal? Well, there's a couple of things we need to do. We need to get into the habit of looking. First of all, that's the main thing. We need to get into a habit of constantly adjusting where those price levels are. And we need to start thinking. So the first thing we can recognize is the market selling? Well, there's a couple of things that we need to look at. We need to look at the macro. And need to look at the micro. So if we look at the macro charts at this stage on oil, is oil selling? Is the oil bearish? Is the flow of orders sell side? Yes, it is. It's very clearly short selling. If you look at where the market closed, which was in here, of course, at 1930, the RGL, is the price below the RGL? Yes, it is. The price is also below the RGL. Would you rather sell it or buy it? Well, straight away, how do you answer that question? It's below the VWAP, it's below the RGL, and it's nearer the day low or the prior day low than it is the prior day high, correct? Massively nearer. So the highest probability is what? Well, obviously it's very, very straightforward. Even if the market's bullish, they'll still rather go into that day low, aren't they? Why? Because they want the liquidity from the day low. So even if the market's bullish, even if the market's bullish, they'll probably still want to try and run some of this volume sweep area here. So straight away, we're already looking at that and saying, well, I can sell around about 60s before the cash open. And I know probably I'll get about 40s at least. At least. Even if they're bullish, I should still get 40s. I should still get 20 ticks out of this bit of business here. Now, obviously, we've just checked our value, and the value is quite clearly not bullish. So we're going to be selling it. We're selling it in the flow and selling it in the direction of the markets. The challenge now is, where is that sell? The challenge now is, how do we
Order
find it? Well,
canceled.
we gave you a tool yesterday to show you. And that tool was, of course, simply volume profile. So when you're using that type of tool, you're using volume profile. Of course, it's important to know what you're looking for. So when you're coming into this as an area, then all you're doing is you're finding the swing high and you're just bringing your profile into the swing low, right? That's as easy as it gets, guys. Swing low. And you draw it on your screens. And as you draw it on your screens, you start finding areas where there was a balance. And you're just going to lean against those balances as if they were lean trades, because that's what they are. If you've got big volume, whether it was on a single candle or a series of candles, can we all agree that institutions traded here? Yes or no? Can we all agree that institutions traded here? Yes or no? So if we agree that that's where the institutions traded, do I know that this area is really, really important? And do I know that this area could be really important as well? So I mark off these prices in advance. We've talked about this yesterday and we highlighted it again. If you're trading as a bid-ask trader, these ideas of where, in other words, you're trading the market make, right? So you're making a market for some of these markets. It's very important, of course, that you as a market maker, as a local on the floor as well, it's very important that you recognize one single thing. What is the biggest advantage you've got on the floor? What's the single biggest, you might say no commissions. You've obviously paying money for a seat. So that's obviously something that you've got to take into account. But as a trader, what's your biggest? As a trader, your biggest advantage is being able to see the size coming in and from whom.
Order submitted.
Seeing the size. As a
Order
short-term
submitted.
trader, you've got to discover where these big dogs are. Did you hear Charlie D telling you that? Did you hear Charlie D telling you that in his webinar when you all watched and listened to his webinar? He needs to know where the big dogs are. He needs to know that. It's essential. It's probably the single most essential piece of kit he's got in his arsenal. He needs to know where the big dogs are. Knowing where these big dogs are is his edge, because he can see if the big dogs are buying passively at bottom edges, and he can see whether they're starting to mark up price. He sees them because they're all got their hands up, bidding and offering live in the room, and he sees who's doing what and at what price. They might be two ticks away. He's bidding fives. He's bidding at five. He's bidding at five. He's bidding at five. And the price starts to drop to six, and the price drops to six. And he pulls away his bid and he says, three, bid. He's now bidding three. The price drops to four, and he says, 99 bid, 99 bid. The price drops to drops to zero, and he goes, 95 bid, 95 bid. And the price drops to 96, and he goes, 90 bid. You see what's happening? He's pulling away his bid, isn't he? He's just pulling away his bid and letting the price drop through. Recognizing that size of pulling and offering into the markets allows you to make a read. Now, the good thing is that this is obviously something we can see from the limit order book, but we can also see one of the key challenges here. The limit order book gives us an idea about where big deals, the big dogs, are going to come in, because we know where these levels are, right? We know where these levels are because we can draw them on our screens. Every single one of us can do it by drawing level ones. Big dogs appear at level ones. That's it. Now, the problem you've got with that is that doesn't tell us what they're going to do at the level one. It just tells us that they're probably going to exist in that location. They're probably going to be doing something there. It doesn't mean it's a buy or a sell. Now, there's two things we can understand. The second thing is we've got the big dogs doing something, not just looking like they're going to do something. So, for example, we might have some big dogs in here and they're offering 85s and they're offering 87s. We can see the big dogs offering 85s and 87s. You can put up your book map and you can see what they're offering, and you can put up your Sierra charts and your Ninja Trade and you'll see what they're offering. That's not that important, right? You can see what they're offering. Might not be real. But what is real is the market profile. What is real is the delta. The delta's real. It's actual traded volumes. It's traded volumes at the best bid and the best offer. It's real. It's actually what the big dogs did do, not what they might do. And that's where the key to this process lies, is recognizing that the big dogs did offer 77s, right? The big dogs did offer 77s. Do you understand? And because there's a
Order
big drop
canceled.
off from the 77s, we recognize that it created a little bit of a toxic event. That's why there's been a big drop off in volumes. That's why the price dropped. So we're not guessing about the big dogs offering 77s or maybe coming in at around about 85s. We're not guessing. We're only using this information to know that they did offer this. And if they offered this and the value's just as good, you'll probably find the big dogs will offer it again. Why wouldn't they? Because guess what the big dogs are doing? Charlie D told you what the big dogs are doing. The big dogs are looking at the big board and seeing whether the value is bid or offered, right? They're looking at the big boards and looking at the yen, they're looking at yields, they're looking at the dollar, they're looking at equities, and they're assessing whether that value is getting better or worse. And they're looking at it saying, well, I'm going to go back in 500 more, so sell me 500. We're coming back in on oil. Sell 50, sell 10, sell 20, sell 50 more, sell 50 more at 77, sell 76 offered, 76 yours. Just going short, right? And all of a sudden, the big dog's back on the books again, and it shows up, right? It shows up. We're not dealing at the POC, we're dealing below the POC, Miguel. That's why we're putting the ledge below the POC in the direction of the flow. In the direction of the flow. So obviously, this is a professional trade. This is one of our professional trades rather than the interns or the intermediates. The interns trade on this would be the bottom edge squeeze, right? The bottom edge would be the interns trade, getting into the breakout trade for that sell. But remember, selling below the POC is the tipping price trade, right? Selling below the POC is the tipping price. So it's about recognizing that the POC is an incredibly important price area, but any edges, because obviously any edge, there was obviously a big seller at 77 and there was obviously a big trader at 69.70. So this could be a buyer, it could be profit taking, but you can see that they were there. Try and figure out what they are, but we can see that they are there. So that gives me an area to deal. Gives me a thought process. And obviously, as this chart evolves, as this trade evolves here, what happens is, of course, that we start bringing this into focus. We start looking into these areas and we say, right, we've now had that sell-off from that top edge, and I want to recognize where the big traders came in. Does anybody see where the big traders came in from that sell? And all we did was we brought it into the top edge. You see that? But do you see where the big dogs sold? Not where they might sell, but do you actually see where the big dogs actually sold, guys? Now, if you're new to the floor of the exchange, you'd be getting told by any of your mentors at that stage, write that price down, guys, write that price down. What price did you just write down on the back of your tickets? Because obviously at this stage, you don't know what's happening, right? You don't know if it's why they're doing it, what they're doing it. You're just new on the floor of the exchange and you ask this seasoned veteran, the guy's got no teeth, obviously, by now. So you look at the guy there and you say, where do I start? And he says, just note down where that guy, say that guy with that jacket there. If he does over 50 contracts, make a note of it, what price he's just done 50 contracts. And you can see that there was two main groupings. There was a grouping here at 79.80s, right? There was a grouping here. So obviously you could, as a local on the floor, you would say, well, 77s, right? So obviously, if there was a grouping at 77s, you'd say, well, I'm going to try and sell 76s. So you put the level in. And that's what you start learning, that there was a seller at 77, 78, 79s, 80s. And the second seller you can recognize was the guy that came in on the break here. See it? And obviously what you do is you find where the POC is, at least where the POC is, find where the ledge is, and start thinking to yourself, there was a big seller coming in here. Agreed? Does everybody agree that there was a seller coming in here? And they were able to push the price down. And if they weren't able to push the price down, of course, we can't lean against that because it never went down anywhere, right? It's got to be a price that we can lean against, because that's the same as a big block trade at the top edge or the bottom edge of any price bracket, right? So there was a big dog at 86.67s. Does everybody agree with that? There was a big dog in here. So obviously the idea is I want to know whether I can lean against this guy. And as we came in, remember what we said about value selling? Remember we said that the market was short coming into the actual cash open. We looked at the value lines and we seen that the value line was orange over the other colors. You can obviously skew it more if you want to get more evidence of that. You can skew it way out into the massive numbers so you can see whether you're getting even more skew. You know, and obviously it's up to you to skew it as much as you like at that stage. It doesn't make any difference to anybody else. But as we skew it more, you'll start to see more and more evidence that the skew starts to give you the storyline that you're looking for. And obviously what happened, as you skew it, you can see that the orange line is going up into that exact price against that big dog seller. And if you look at the big dog seller and you say, well, they worked sell side and the values went down since then, what's the chances that that big dog is going to come back out and sell again, guys? If you've just made a note in your back of your cards that the ledge there where they stopped doing business was 62 and they pulled away the price at 62. Can anybody hear us? It's a weird one.
Uh-oh. Looks like we have problems. We can't have problems today. It's Wednesday.
Okay, is it visible and can everybody see it?
Yes.
It just gave up disconnected for a fraction of a second there, and it went blank. Anyway, okay. So does everybody now see that sell at 60s? Does everybody see why it was a sell into that 62 print? You see it? It's not that difficult to spot it, is it? The value's bearish. The time of the day is the right time of the day to get the short sell on. We're going with the flow of the move. We're going in the flow of the move away from those price areas. We're starting to recognize that, the shape of the markets, we've obviously got a couple of ideas about target prices and the like. We obviously have a target price here because we simply then do the bracket against that area, and we came up with this measured target price here for the first move. And from this point onwards, what do? From this point onwards, we go with the flow as much as we can. Now it's a sell side market. We don't want to buy it unless we get very strong evidence of a buy reversal, right? So remember what we said yesterday about pressing the advantage. That's why we called it the press trade. Now we want to go with that press. We want to keep working the offers until something changes, dramatically changes. So to do that, we just keep dragging the profile down. It's still the same sell trade. And as we drag the profile down, can everybody see where the big dogs came in? Can everybody see where the big dogs came in? Can you see that whereas a rookie floor trader, can you see where the price would be? You'd be starting to make notes of. You'd be making a note of this price area here, wouldn't you? Yeah. There's the edge. There's the edge right there. So that sell came in from that big dog seller right there. It's a real seller. It's a real money seller. So if we've got evidence of that real money seller, we can now recognize that that's a very important price. It doesn't mean they're going to be there again, but we know that that's where they did sell from the last time. And traders have memories. They sold there the last time, they made a lot of money, they'll probably sell there again and make some more money. Because even if the markets are bullish, what happens? Even if the market's bullish, they'll take the price down to buy into it, right? Even if the market's bullish, they'll take the price down to buy into. And obviously the idea there is that we're now looking at that edge. The value line goes up, right? The value line goes up. And we're now looking to try and get back into this rejection up here. We've got the edge price that we're looking for around about the 42s. The value now drops away from the top line. And we're left offering into that 42 print, are we not? We're left offering into the 42 print. And this is real value trading, isn't it? Real volume trading, real big dog trading. Basically, you're trading an edge. You actually have a real money edge. Now, obviously, we're not looking at this from the point of view of a retail trader. We're not looking at this and saying, well, do I sell the 42s because the prices are dropping? You don't know you don't know if it's 42 or 41 or 40s or 45s or 44s. You've got no way of knowing that at this stage, right? So if you're on the floor of the exchange, what are you now looking for at this point? You're on the floor of the exchange. What are you looking for? The price is currently trading 40. The price is trading 41s. The price is trading 42s. What are you looking for? It's in your technical indicators, Abbots. If you go into your technical indicators, look for it's not session profile. It's just a fixed anchor profile, fixed range profile. So if you're looking at this trade as a sell trade, you're obviously going to be looking for those big dogs selling 42, right? You're looking for them selling 43 or 44 or 45 or 46, right? Whatever order flow tools you've got, you're now going to be calling on to look for the big dog sellers at that point on the screens, correct? Now, we don't know where they're going to come out. Nobody knows where they're going to come out. And the only person that knows where they're going to come out is the big dog themselves. They know where they're going to go back short because they're obviously starting to get ready with their offers. So nobody knows. So what we've got to do is we've got to recognize them absorbing, for example, a buyer, or we start looking at least for that opportunity, right? So if we were to look at, for example, no price chart, right? Forget about the price chart. If we were to start looking at, say, the delta chart, do you think you could tell from the delta chart if the big dogs were back in action? Do you think you could tell from a delta chart whether the big dogs are back in action? In other words, if I showed you this delta chart with no prices on it, can you tell me that the big dogs are back in action at any stage on that delta chart? Sure. It looks like they're back in action here, doesn't it? This area here looks like the big dogs are back in action. Does everybody agree with that? Does anybody not understand why that's the case? In which case you need to go back and look at the delta classroom against tick delta. So this is volume delta versus tick delta. So it looks like the buyers are starting to get absorbed, doesn't it?
Order submitted.
Well, if the buyers are starting to get absorbed, is that not useful information for us as traders? Well, in an area that we think the buyers will probably get absorbed into, it's massive information for us as traders, right? So when I look at the price action in those areas, we can see the idea in that particular price point. It's not exactly the biggest, most expansive volumes, but we're now getting an idea. Look at the price, 86.42. Did we already know about that price before that jam took place? Did we already know about 86.42? We sure did. We sure did. So we're now looking for that trade in amongst that stuff. And obviously the sell came back up again and we got an exhaustion print because that's exhaustion now, isn't it? So obviously we see that there's no buyers in it. They're just trying to sweep any stops off. So that's an exhaustion print. That's called fresh air selling. And we love a bit of fresh air selling at 43s, 44s. That's a limit order sell. And obviously the takeaway from that sell was pretty good, right? Pretty good, right? That was spectacular, actually, to be perfectly honest. Think about all the edges we've got in that sell trade. Sell side market, sell side RGL, sell side VWAP, sell side structure, sell side value, sell side deltas. So many edges here. Buyers getting trapped. Big dogs in the background selling at that particular price. So many edges that it's almost embarrassing if I don't get a sell into that top line now, isn't it? It's almost embarrassing that in the short-term world, if I don't see that absorption, I'm losing the plot because that is sensational. And if you can find that trade a couple of times a day, guys, you've just found your money shot. You've just found your money shot. Trading with, not against. Because if you're trading this, even if you're bullish, you know that the worst case scenario for that short is that the big commercials will come back into this area here. So you've probably still got a bit of room there, about 20 ticks of room to even get out. Even if the market is bullish, you've still got about 20 ticks of room. Just think about where the deltas are if you're bullish. If you're bullish and there's so many buyers in, do you think the market maker is going to mark up the price here? Honestly? Do you think the market maker marks up the price when everybody's long? Or do you think they try and bring the price down to sweep the stops, to try and get rid of those buyers? So even if you're bullish, this works for you. This sale works for you. Even if the value changes, this sale works for you. Even if you've completely mucked it up, this sale works for you. Unless the Russians and Saudis come out and simply decide to go buy side again and everybody just dies. You know, it's as simple as that. You know, but you can't legislate for those types of things happening, right? You can't figure that out. It's just going to be what it is. This is a sell trade, guys, and make no mistake about it. This is an absolute no-brainer sell trade for a local. No-brainer sell. And one of the things we talked about was the idea of this joining the big dog into a trade area. And this idea of a limit order book, somebody asked me to explain this concept of 100 bid and 100 offers, right? So we may as well just talk about this because this is important when we're looking into these areas to get this sell on the books, right? So we've got 100 offered here and we've got 100 bid here. So that's the depth of market, right? The limit order book is 100 by 100. And what I was talking about was this idea of what absorption is. Why is absorption such an incredibly important concept? Because absorption is the big dogs. We've already established that knowing where the big deals are coming in is your advantage as a short-term trader. If you don't know where the big deals are going to come in, guys, you can't be a short-term trader. You're going to miss out on everything. It's vital that we make trading decisions when we know the big deals are coming in or have came in and may come back in. And this is how we identify a big deal. These big deals are not crossing, spreading, and these types of trades. These big deals are simply outrights in the direction of the market. So let's assume the value line is bearish for us. The purple line in the background isn't a value line. We were talking about the pressure line that was on the gold the gold chart that we showed earlier. We'll go back to the gold chart today, by the way, Jez, just since we've done it this morning. Some people might be asking what it is. So what happens here? 100 offers and 100 bids. 25 buyers come in. Okay, so 25 buyers left the offer. What happens to the 100 lot liquidity? Assuming nothing changes, the 100 lot liquidity drops to 75 contracts, correct? Because the
Order
100 lot
submitted.
buyers just consumed,
Order filled.
sorry, the 25
Order
lot
filled.
buyers just consumed
Order filled.
that 25 liquidity. So what happens to the volume delta and the tick delta? At this stage, the volume delta and the tick delta both rise, right? The volume and the tick delta both increase because obviously it's on an uptick. So the volume goes up, right? And then we get another 75 buyer coming in. And the book goes back up to 100. And another 75 buyer comes in. Now we've got 100 buys.
Order submitted.
100 buys at the last uptick, correct? And the book is showing 100. 75 buys means that all of a sudden
Order filled.
the deltas went from 25
Order
to plus
submitted.
100 now, right? So the delta's still scalping higher and the price hasn't moved any higher. Well, that's our definition of
Order
absorption,
submitted.
isn't it? That's our definition of absorption. That was the perfect definition of absorption on that chart right there, wasn't it? Because obviously
Order
this
submitted.
delta was going higher and this price wasn't going any higher into that key
Order filled.
price level.
Order canceled.
Correct? So this is absorption.
Order submitted.
But the main thing is, so what? It might be a massive buy opportunity. So what is absorption? Well, it's absorption, but the value's bearish. It's absorption, but the structure is bearish. It's absorption, but we've seen them selling this price
filled.
earlier on in the session with big size. Think about what that means to those guys that have got maybe 1,000 contracts at that price. If the price goes up from here, they lose money on 1,000 lot. Is that not significant? Of course it's bloody significant. They don't want to lose money on 1,000 lots, so they're going to make sure this price gets protected. If the value is good, they're going to add to their positions. It's dead obvious, right? It really is that obvious and really is that simple. There's nothing more complicated about it. And we know this price level exists because we used a profile tool to find it. We asked you to use it yesterday, and obviously it's up to you if you've gone ahead and done that. If you haven't, you've missed out on thousands and thousands and thousands of dollars today using gold, using oil, using everything. So what happens next? Another 100 lot buyer comes in, and the order book refreshes to 100. And then another 100 lot buyer comes in, and the order book refreshes to 100 again. This could be a nice order. It could be simply the book's being refreshed. It doesn't have to be a nice order. It could simply be that the book keeps refreshing and the liquidity is visible for 100. A nice order, the liquidity never becomes visible for 100 there because obviously it just gets consumed as the bids, gets consumed in the micro world charts as the bids hit the market. That offer takes the trade instantly and the price never really shows as an offer on the screens. And obviously what happens is we get another 100 bid and then we get another 100 delta bid coming in, right? So we get that delta massively higher. The price hasn't gone anywhere. And obviously at some stage you've got a 3 times threshold if that's your indicator at that stage. And if your indicator is a 3 times threshold, then of course this could be a nice order or a refreshed order book or simply just a classic absorption trade. And 3 times a threshold, and obviously that gives us this thing called absorption at the last traded quantity. And the price is probably bearish.
Order filled.
Now obviously, if the value went bullish at that stage, they would still be incentivized to try and take this price down to get rid of those buyers. Because if obviously they go higher now, the probability is now very, very strong that if they go higher at this stage, these buyers make money, right? I mean, the buyers do make money. They could easily get a stop at break even. The market maker is now out of it. They're going to lose money on this trade if they take it higher. Well, that's bad news. The market maker doesn't like losing money. So that's why they generally don't really take it higher. And if they do, it's literally only a tick or two, which is not going to give the buyer of 300 contracts any chance to liquidate for a profit, right? Because they'll just pull away. They'll just pull away the trade instantly. They'll pull away the trade instantly.
Order
so
filled.
They never get a chance to take the profit. But we've got to be able to spot this. We've got to be able to spot this. The threshold
Order
we're talking about is
filled.
that the book liquidity
Order
shows
canceled.
300, shows 100, but there's now been
Order
300
filled.
contracts traded here, Murray. So this is the last traded quantity is 300, but the book liquidity only shows 100. So that means that there's got to be somebody somewhere refreshing the book at that stage to the tune of 3 times the amount that's visible, which obviously gives you quite an idea that there is a massive difference in the amount of traded versus the amount of actual visible liquidity, suggesting there is a big dog selling at this price. And that's what absorption is, a big dog selling into this price point. If the price goes up, no trade. But if the price now down ticks, we can join the trade, can't we? We can offer against that price if the price starts moving down. And would this price level here not be a price level we would, as traders going forward, is this not a price level we would want to know about in the future? In the next 10 minutes, the next 20 minutes, the next 30
Order
minutes? Is this
filled.
not a price that you believe yourself that you would desperately want to remind yourself about? Yes or no? Of course it is. But do you remind yourself? Do you remind yourself about this price
Order
level, guys?
submitted.
Be honest. Do you remind yourself that there was a big buyer there? Do you have a way of marking your screens? Do you take a mental note of that price? Do you write it on a notepad? Do you draw a line on your screens? Do you draw a box on your screens to remind you that there was a big buyer or seller at that price? So that if it happens again, you're ready to do the same trade and try it again?
Order submitted.
You see how the simple stuff makes money? Hold on a second.
Order filled. Order canceled.
And everything's still good. Ray just had to step away for a second. So if you're thinking, wait a minute, wait a minute, wait a minute.
Right,
Order
guys.
filled.
Okay, so these are incredibly important
Order
levels,
filled.
ideas, thoughts. There's obviously about 4 or 5 of you that do write these levels. That's a pity. There should be a lot more than that. But obviously, if you haven't done it, start doing it. Seriously, start doing it.
Order submitted.
Your biggest
Order
edge
canceled.
as a short-term trader is knowing where the big
Order
deals are
filled.
coming in or where the big deals have came in. That's your
Order
edge.
filled.
Because the big deals know where the value is, right? They all know where the value is because that's what they trade. Your job is knowing that they know where the value is. And if they know where the value is and they've shown you that that's the price that they're willing to sell at, and the
Order
value's
submitted.
still there, you look for them doing it again and you deal with them. Would you rather trade against Goldman's or with Goldman's? Let's trade with them for a change, right? That would make a lot of sense. Let's trade with them. So this is the idea. We just used this phrase here that we talked about, the burn rate.
Order
And the burn rate was
submitted.
just how fast does these buy orders burn through the 100 contracts? How fast do they burn through that 100 lot sell trade? And obviously, if they don't burn the
Order
contract because
canceled.
100 stays 100 stays 100, the burn rate is effectively zero. So all of
Order
that volume
submitted.
is just getting
Order
repositioned
canceled.
with a refreshed order book every single time absorption shows up. Perfect. We're going to take a little break, guys, because I wanted to show you the gold scalper. I've not had a chance. Kim keeps asking me, and I've simply just not had a chance to look at it. But I did get a chance yesterday to have a quick look at it. I've added a couple of order flow tools to it so that we can take a little look at. But I promised that we would take a look at it for Kim. It has a kind of structural quality about it,
Order submitted.
a kind of systematic quality about it. So I want to just take a little bit of time. David did spend time building it, so I owe it to David to, show you guys what it has. And I apologize for not showing it earlier, but let's get it done now. And we'll do that next. So give us
Order
60 seconds,
Order
and then we'll
filled.
get on to the gold scalper. Now, the gold scalper in the background is just the value. So we'll talk about that. But give us 60 seconds, and then we'll get started, guys. 60 seconds.
Order filled. Order filled. Order filled.
Yes, Everett, it is being recorded.
Order filled.
I couldn't tell. Are we having some troubles? It does seem maybe Ray just stepped away
Order
because
order filled.
a little 60-second break. I know he's had to step away for a couple times. We'll take a little break.
Order filled. Order filled. Order filled.
Oh, nice. I wonder if we'll get to see David's gold scalper as well.
Order
That's the
filled.
one.
Order filled.
See, maybe Ray will start listening to me when I say, hey, we got something good for you to check out. Like he said, after 1,000 times. We love it.
Order filled. Order filled. Order filled.
And don't forget, guys, this afternoon we do have a session in the other room if you want to join us. And if you don't, that's cool too.
Order filled. Order filled.
Just make sure to send all your
Order
friends.
order
Only
filled.
the good friends.
Order filled.
We
Order
don't need
filled.
any trolls.
Order filled. Order submitted.
Welcome in. Second classroom. We'll get done dusted so that we've got a break for dinner and so on.
Order filled.
This is David's
Order
gold
filled.
scalper. It's based on the copper-silver
Order
relationship.
filled.
So it's based on the copper and silver relationship, which we have on our screens. So it's not in replacement of these things. It's just basically a way of looking at it on a single price point with a value that's based on the copper and the silver. It doesn't include your dollar. It doesn't include your bonds, as far as I'm aware. It's simply your copper and your silver valuation. So there's still work to be done in terms of the other elements that you may wish to include on the screen. Still other elements that you may wish to include. What I've asked David to do is actually change the score.
Order filled.
Change these arrows to reflect the fact that the
Order
score is
filled.
either ones or twos or threes or fours or fives. That way, looking backwards, we can see how big a value we were building into the top edges and see if that's even
Order
a
filled.
possibility. So when we're looking at this, as I said, it doesn't replace anything. Forget the bottom two brackets. That's just part of the formula for working into this as a scalper process or the value process, right? But let's take a look at what we've got on the screens. First of all, I've put it on a Renko chart basis. Okay. Why have I put it on a Renko chart? Because for systems traders, Renko's a little bit easier to read because obviously it's a standard block size. For no other reason, that's all it is. It's a standard block size. It takes away a lot of noise for systems traders. So for people that like systematic processing, people that don't like a lot of noise, Renko is very good for those people because it takes away some of that nastiness of a candlestick, right? It
Order
takes away some of
filled.
that kind of chaotic view of a
Order
candlestick. These
filled.
candles are all uniform size. This is a three-tick candle, three-tick Renko, which means obviously it takes 3 ticks to reverse one of these candles, 3 ticks to reverse a candle. Still a very small tick size, as you could probably agree.
Order filled.
So we are still getting some ideas about
Order
that idea
filled.
of going forward. That idea of it's not a macro chart, but obviously if we increase the tick size, you'll get less detail and you'll get less noise. And obviously whether that's a good thing or a bad thing, that's your choice. So when we look at this as a trade idea going forward and we're starting to think about whether we want to do any business, let's go through what the lines are. Well, the lines are pretty straightforward in the background. We've got the blue line, which is our volume delta. We've got the brown line, which is your tick delta, just the same as everything else. We've also got this purple line, and the purple line is very simple. The purple line is the pressure line. What is a pressure line? It's just a volume momentum indicator, very similar to OBV or time segmented volume, okay? So it's just OBV, time segmented volume, but it's called the pressure line on David's package. That's what we're using
Order submitted.
to highlight the divergence against volume, for example. Okay, so it's a useful piece of
Order
information,
canceled.
especially if you're trading momentum. You want to know that there is a bit of volume behind the market move when you're selling with momentum or against momentum. You want to know that volume is starting to disappear. So that's the 3 lines that are on the screens, the pressure line, the volume delta, and the tick delta. Everybody happy with that? So let's get on to the
Order
chart
submitted.
lines themselves. And remember, we're not bothered
Order
about these
submitted.
because these lines here are just the silver and the gold and the copper line formulas that calculate the value line. Okay, calculate the value in this. So let's get into what these little triangles and dots mean. There is one other indicator on it, and I'm looking to see if I can see any examples of that indicator, and there's not that many on this screen, but we'll get into it anyway. The dots, first of all, is a buy-side imbalance. If it's a big blue dot, it's a big buy-side imbalance. Okay? If it's a blue dot, it's a big buy-side imbalance. If it's a small blue dot, it's a small buy-side imbalance. If it's a big red dot, it's a big sell-side imbalance. If it's a small red dot, it's a small sell-side imbalance. So in other words, it's just order flow. It's just order flow. Well, delta basically, Miguel. It's the concept of delta, isn't it? So if we've got a blue dot, we should see a very decent sizable buy-side delta coming in. So it could give us an idea that things are changing. It could give us an idea that the delta is now pressing. And obviously, if it happens to correspond to a value change, that's quite a useful thing to know about. So what about the triangles? Well, they're very, very straightforward at this stage. The yellow triangles means that the short-term value, and it is short-term value, the short-term value is bullish.
Order filled.
And the pink triangles means the short-term value
canceled.
is bearish, of course, right? So that's pretty good. Now,
Order
the reason
canceled.
why that's pretty good is you can obviously see when the market gets bullish on a downtick, but you can also see when the market's still bullish on an uptick, which obviously allows buyers who like to buy at higher prices that extra quality to keep going after the trade, that ability to add to higher prices or add to winning trade outcomes. And what's the final trade indicator we have on that screen? You don't see many of them.
Order filled.
You might have spotted one or two. The final little trade indicator we've got on this screen, and I can change the settings, of course, is these little green squares and the little red squares. Okay, so you'll see a green square just there. There's a red square just there. See it? Not the most obvious, but obviously once your eye's tuned to see it, you can start recognizing the little green squares and the red squares, okay? What does that mean? Absorption. That's it. Simply absorption. So there's a billion gazillion indicators that will show you absorption. So obviously if it's a green square, that means sellers are getting absorbed. If it's a red square, that means buyers are getting absorbed. Why is that useful? Because this can give you your trigger price, of course. If you were bullish and you see a green square here, then of course you could put a buy stop order just above that green square, and that's obviously where you could lean against for that rally price just there. So that covers all the lines, doesn't it? That covers all the lines we have on the screen. Now, there's obviously got to be challenges as to what we're trying to do in these areas, and we don't have the dollar in play at this stage. But one of the things we can start recognizing is that doesn't mean that we can stand alone in this. We can obviously put an overlay chart on this if we wanted to, right? If I wanted to now add to this screen an overlay of the Japanese yen, that would be a brilliant thing to put on this screen right now, which would mean you've got a value line and a value score. And if the value score tied in with your value line, you're in great shape. I didn't have this, where I should have done that before I did this classroom, but it doesn't make any difference. So the first thing we can recognize is, when do we get a divergence in the value? Well, we can already recognize that, first of all, we get a divergence in volume here. You can see that the volume coming back in here looks very, very minimal compared to what we've had before. Does everybody see that? The volume is minimal. Yeah? The volume is minimal. So we're getting a divergence. Now, that's the equivalent of a divergence on your OBV. It's an equivalent of a divergence on your time segmented volume. So no great shakes. It's not that difficult.
Order
But what else
canceled.
do we see? Well, we start to see, as the price rallies, we start to see these pink triangles. That's okay. There's pink triangles all over the damn place, right? But it's pink triangles and the volume is coming out. That's the important thing, right? Pink triangles and the volume is coming out, suggesting that the buyers are recognizing the lack of value, perhaps, because you can see that coming through the pressure score, right? And it's not about one candle when you think about it. It's about the story that's building around these candles again. Now, at the same time, what was interesting to me on the gold was this idea here. Look, take a look. Can everybody see at the same time on the chart? See, it's the same time of the day, 15/16 today. At the
Order
same time,
submitted.
the Japanese yen was getting murdered. You see that? The Japanese yen was getting murdered. Now, obviously, if the Japanese yen's getting murdered, are you not excited in the first place about selling into this enemy after that big short sale came in there? Are you not getting mega excited about getting a bit of business done into this 48 print? Of course you are. So this is what I was talking about. You would have seen that as a line on your screens if you were obviously just putting that overlay line
Order
on your
submitted.
Japanese yen, which I'll do for tomorrow, of course. I'll do it when we finish here. I'll put an overlay for the Japanese yen onto
Order
the screen so that
canceled.
it's there as well as the score. So we've now got a great idea that we want to be selling this in the first place. And obviously, if you're using TradingView, you can obviously look and see whether that was a trade you wanted in the first place.
Order
And the
submitted.
idea is, of course, if you're trading it, you're able to look at your charts and you're able to find those trade ideas, pink below and pink above, those kind of ideas from the copper and silver lines. And that's very, very easy to do. You can see higher highs or higher lows. And if you look at the silver and the pink lines on that chart now that I've zoomed in, you'll see that the pink is below the
Order
blue and the
submitted.
blue is rising. That's the silver relationship, correct? And that's a bearish relationship there. And you can see here,
Order
you can see
filled.
the pink is rising and the blue
Order.
here is starting to diverge.
Order
That's obviously a
filled.
bearish sell on the copper. So that's good news. These two lines agree with this sell trade. The two lines agree with the sell trade as the yen starts selling away from that price
Order
level. That is
submitted.
fantastic news. Absolutely fantastic news. So when we look at that as an idea, we can see a couple of things. We can see that there was a lot of imbalance buying here. We can see the delta in the background confirms that imbalance buying coming in, right? So we've got that storyline. We can see, of course,
Order
that if you
filled.
wanted to sell it,
Order
you'd be obviously
filled.
looking to sell into any of that imbalance. So obviously, if the
Order
idea
filled.
is that this is a very bearish market and the volume is now collapsing out of the trade, an imbalance is a sell opportunity. So if you want to be very
Order
aggressive
filled.
with your passiveness, if there's such a
Order
thing, if you
filled.
understand what I mean, then of course you're getting into that sell trade, into that trade area there.
Order filled.
If you want to wait for the seller to show up, then of course you wait for the seller to show up. And the seller showing up that I'm very excited about is this seller that comes in on an uptick.
Order.
So obviously
Order
we're getting a
filled.
little bit of value in that candle. If you've got a green candle with some sell imbalances and a sell side market, you may say, is that not an
Order
absorption?
filled.
Yeah, it would have been an absorption at the bottom, not at the top of the candle. So obviously the idea there is I've now got the top of the candle, so I can sell back into this as a storyline.
Order
Right?
Order filled.
So this is a perfect
Order
short for me
filled.
to now take advantage of when I see
Order
that sell on a
filled.
green candle. And the price now sails away from that price beautifully. Sails away.
Order filled.
We got a little buy imbalance. No
Order
surprise about
filled.
where it was. It was at the swing low.
Order filled.
So we got a little buyer coming in here, probably a profit take, right? The value is still bearish. The value is still bearish. The value is still bearish. There's sell imbalance, sell imbalance. The value is still bearish. Looks like there's a bit of absorption starting to come in. Do you see it? Buyers are starting to absorb. No shit, Sherlock. Why would buyers absorb there? Because it's a measured move from the prior swing. We've just gone 48 fours to 46 fours. So you're already thinking to yourself, around about 44 fours, we're going to find a measured move, correct? Well, this was at 44 sixes. Yeah? 44 sixes, 44 fives, 44 fours. Exactly where you thought the buying was going to come in, the buying came in, surprisingly enough, right? Surprisingly enough. And obviously the price just stalled. And you can see the volume diverged as well. And obviously everybody was now wanting to wait to see how this story evolved at that point. In other words, you go back into your value charts, you start asking the question, am I still bearish? Am I bullish? What am I going to do here? How am I going to deal it? Have I got any value to really get involved? And you just make decisions, right? You make decisions on this. Now, if we catch up to the edges, you'll see that the leg lower from this area here, what happened to the leg lower? What happened to the leg lower? Well, look at the value becoming bullish. You see it? The value became bullish. See how the value is now bullish, but there's an awful lot of sellers trying desperately to press it. So this looks like an awful lot of buy-side absorptions on this dip, doesn't it?
Order filled.
Do you agree?
Order
if you've got a
filled.
seller there, but an absorption here, and a seller coming in again, but value building on the buy side, does this whole area look like somebody's starting to absorb that buy side value?
Order
Of course it does. That's what it looks like to me. Somebody's buying the absorption. Now, is that a buy trade for you? Well, it's at a bottom edge. So the answer is probably no, it's not a buy trade. I would rather be selling it, would you not? Does anybody see the sell trade? It's quite a good one. Anybody see the sell trade?
Order submitted.
Look at the value going bearish with a sell imbalance on a green candle. Do you see it? Look at that for a sell opportunity right there. Is that not a sweet looking sell? What do you think?
Order submitted.
The delta peels right out. The volume, the pressure line starts dropping right off as well. You start looking at that and saying, my goodness, I like that sell. Look, the pressure lines dropped right out. The values came in sell side. Quite nice, isn't it? We've obviously seen sellers at lower prices because of these two absorption pins here, right? So we've obviously got a seller at lower prices. So this is a very, very nice looking opportunity to maybe get short back into that as a storyline. Now, we already see that the value seems, every time we go lower, now the value seems to build on the buy side. And sure enough, as soon as we go lower again, the value seems to build back on the buy side. Does everybody see where the buy trade is? If you wanted to take a buy trade, does everybody see it? What was the rule for that sell trade? Pink dot, pink value, declining pressure. Yellow dot, yellow triangle, blue dot, rising pressure. Does everybody see the opportunity maybe to buy gold as a possible systematic type trade outcome? Is that visible to everybody? Does any other candle have that trade quality? Any other candle have that trade quality? I'm not just cherry picking this one.
Order submitted.
There's not a single other red candle that has that trade quality, is there? So that trade there is identical reverse to that trade there, isn't it? So selling off this 45s and buying back off this 41s allows you around about a $350, $400 profit, which is pretty good. It only took you 5 minutes. 5 minutes to make that money, which is a rather nice outcome, if you ask me. A very nice outcome.
Order filled.
And the other good thing about that is that you were waiting for that low price
Order canceled.
below the prior low because you were also using the concept of structure in your thought
Order
processes.
submitted.
So you know that the market's been bearish. You know that the VWAP's above you. You know that the structure is sell side. You know that the RGLs are red and sell side as well. So because of that, we can understand that this is a market. If we're going to bid it, we've got to bid it very quietly, very
Order
passively
submitted.
at lower prices, and we just look for it. We read the stories, and if the story's still pressing,
Order
we wait
filled.
for it to stop pressing.
Order canceled.
In other words, we start benchmarking pretty much everything we use. And if we benchmark pretty much everything we use, we can recognize that that is a
Order
benchmark.
filled.
If that's what you're using, right? If that's your benchmark process, that's what you're using. So when we kind of get our heads around this, it doesn't mean at the end of the day that you have to be the buyer of a bottom edge. I mean, I could have used this idea here, and I could see that there was a seller getting absorbed here, which means that there was a buyer sitting there. So if I wanted to make sure that buyer had disappeared at that price here, for example, as a sell, I could obviously sell away from that green box there, couldn't I? You understand? Because this guy might still sit here and absorb the selling. If I sell at the top edge, they might absorb 2 ticks below me, 3 ticks below me. You know, I've got to be careful with that. But if I want to avoid that guy, I just sell when the price now breaks out of that price area there. Likewise, I might not want to buy it here. I might want to buy it when this seller now gets rid of that trade. And obviously, I might want to buy it above that price there, just in case this guy comes back in. And obviously, we don't make much money, but we still make a scratch out of the deal. And obviously, from that point onwards, we can see that they come back again, they come back again, they come back again into the bottom edge. No real value on the bottom edge at this stage. Disappointing. Okay, so it's disappointing. It is what it is, guys. It's not a guarantee you're going to get the exact trade at exactly the right price, but you can see that the amount of volume on the sell is collapsing. The selling deltas are collapsing, as in rising. There just isn't any sellers in here anymore. So they're obviously now sweeping stops to get as many people short as possible, and just not a lot of people are falling for it. And like we did in here, if we don't get that reversal, we simply buy above the red absorption, right? Or the green absorption if we've got one. Because if we've got a green absorption, that means that sellers were now getting absorbed. That's better than the red absorption. It just might not be there, right? But sellers getting absorbed here. So the buy above that price would make perfect sense. And if we didn't see it, it would be a buy above this price. And we obviously got a nice buy side swing away from the bottom edge. The question, of course, is why have we not got any value here? Why is there no value showing up? So you might have avoided that trade at that stage. Absolutely fine. No issue with that at all. So we can actually start seeing the systematic application of this as a narrative. And guess what? If we don't get the system value divergence or volume divergence or even macro value, you can see that we got a macro value here against the pressure line, right? So we see we get a macro value divergence against the pressure line. You can see the prices are dropping. Then we get this absorption print here. I don't get any buy side value, but if I liked it against, say, the Japanese yen, I could buy against that and I could buy against that there. And obviously I could take the price bid again at that stage against that lack of any real sell side volumes. The absorptions are the squares, Murray, absolutely. So these little squares, these are absorptions. But there's a lot of, we've got loads of absorption packages available for, from David and from Greg and the various tools, haven't we? Lots of absorption stories.
Order filled.
So we go forward. We now see buy side imbalance. We see value at higher prices. There's a very strong case that that's going to keep going higher, isn't it? A very strong case because the pressure line's turned up. So these are the kind of trades that you could then argue that there's a very strong case to buy for the press. We're not into the prior high, but if you see that candle, the offer is going to be at this price, isn't it? You're going to imagine that the offer is going to be back to where that price is because you've got big buy side imbalance. The pressure line's rising. The tick is going with the candle. And we've got value on the buy side. So that's not going to change anytime soon. We've got a lot of edges to go for the press here. And there's your press candle. Do you see it? So if you don't like buying the bottom edge, there's your press candle. You might be saying, but wait a second, Ray, wait a second, Ray, wait a second. If I took the press candle on the previous, I could have lost money. No,
Order
no,
filled.
no, no. This here is not the same. We've obviously got the price target, of course,
Order
absolutely.
filled.
But this here is not the same, especially this one, because you're too close to the top edge, too close to that possible commercial seller there.
Order
You're
filled.
not going to press the end of this candle. And obviously in this candle here, a lot of that buying pressure is getting absorbed. See those two red blocks? If there's a
Order
lot of
filled.
buying pressure here getting absorbed
Order
here,
filled.
do you think that this is a wise trade to try and press the top edge? Now, as it turns out, you would have been successful on the press, but do you believe that would have been a good trade to press when you see that absorption? The answer is probably not, right? Probably not. So
Order
this is about
submitted.
the concept of Nash again, isn't it? The idea that if everything stays the same and that's the setup, it should
Order
easily make
canceled.
target. This is a great example of a Nash buy trade that easily makes target, and it makes about $100, which is pretty good. You're only in the market for about 30 seconds to make your $100, so it's a pretty good, very, very aggressive fixed setup here, of course, a very fixed setup. And you benchmark it. Lots of room to the top edge. Movement higher in terms of your pressure line. Movement higher in terms of delta, not too fast, which is a good sign. Movement higher in terms of the tick.
Order
That's
filled.
a good trade. That's a good press trade, isn't it? A very good press opportunity. So we obviously can use this as an idea. You see the divergence creeping in here. Do you see how this top edge evolved? See it at 1554. See how beautiful it is? Now, at that stage, the gold, the yen price, sorry, had started to flip back out again. We're obviously sell side business. We've already touched on that as a concept. Sell side only business, if you like. And, obviously at that stage there, you're going to be asking that question, what am I doing here? What is my role? And obviously, if you look at your yen chart at that stage, you would have been able to recognize that the yen had flattened out here at 1555.56. Did you see it? So you've already seen that evidence. The market's obviously very red in the background. You can see you're below the VWAP if you're using this as a VWAP area. You can recognize that divergence in terms of the yen. There's a lot of stories here to sell into, isn't there? Slowdown in price action. So you go along to that trade and you say, right, I like the idea of selling it. I like the idea of being short. I like this as a storyline. Well, guess what? At higher prices, you start seeing red sell side values coming in. And with red sell side values coming in, it's not just at higher prices, but now we see the pressure line coming out. The buyers seem to have stopped buying. Now, if they're going to sell it, life should be relatively easy as a sell side limit trade,
Order
right?
canceled.
If that pressure's dropping, selling limits makes life a lot easier. So obviously you might think it's still too early. You want to see the absorptions. You want to see buyers getting absorbed. Does anybody see any buyers getting absorbed? Well, as if by magic, buyers got absorbed right there, didn't they? You see it? See how buyers got absorbed right there?
Order submitted.
And the good news is,
Order
we
filled.
actually had that sell side imbalance below us already visible.
Order filled.
Sell side imbalance below us was already visible. So we're now looking at this and saying, I've got a lot of evidence here. And obviously we've got a very, very nice run to a target price. This is where Renko has an advantage over a lot of things, because obviously it's very easy to identify where buying and selling came from as key levels. You see how easy it is? That's not the same as edges, of course. It's just key levels, key reference points. So obviously what happened to the gold? Well, not as much as you hoped was going to happen to the gold. It did start to drop off of that key price, of course. It started to move. It started to lose a little bit of value edge, and then we started to see it regaining that edge again. And you can see that the buyers again got trapped here. Well, the delta was going up, the tick was going down, the pressure line was going down. And obviously, if you're watching that, you may well have been able to take advantage of another short sale there. And obviously, the short sale eventually trades into that little price area there that you thought you were going to be able to achieve earlier. And that's another nice little winning trade there from 43.4s to 41.4s for $200 profit. So we get an idea that there's elements. You can see this bottom edge here with the value going, the pressure line going bid, the tick going bid, the volume profile, storylines. The narrative is becoming incredibly bullish in here, isn't it? Very bullish. Well, what did that
Order
tie in
submitted.
with, guys? When that storyline started to evolve here at 1630 going forwards, the yen was selling quite aggressively.
Order
But does
canceled.
everybody see where
Order
the trade
submitted.
changed on the yen? Does anybody see it? Did we not get a change in the storyline on this retest here? See it? See the change in the story here? So 1638, 1639, 1640, right? So we look for that change. Let's see if we
Order
can see
filled.
that 1638, 1639, 1640. Does anybody see that this is the price
Or,
area here?
order filled.
You see the value is bullish. Do you see the order flow is bullish? See how the order flow is bullish, bullish imbalance, bullish imbalance, bullish imbalance. Can you see
Order
that the
filled.
pressure line is bullish?
Order
The
filled.
tick is bullish. Everything's bullish, right? Everything's bullish, except that the buyers seem to be getting absorbed into these areas.
Or,
So if we're
order
going to
filled.
buy it, we need to do what? We need to make sure we don't buy it into that price. We need to either buy it at the low price
Order filled.
or we need to try and get away from these price areas, don't we? In other words, when the price then trades down in here and we get another buy coming in, we say, you know what, let's get into this buy trade here. Or we wait till this price clears here and we go into a buy trade there. Because obviously the
Order
buy trade
filled.
was getting jammed into these two guys here, right? See it? Somebody's selling still for that lower price, and that's okay. Let's get these guys
Order
upside down in this case.
filled.
And this time we're using the limit sellers as our lean.
Order
We're
filled.
leaning against those limit sellers that seem to be
Order
getting jammed
filled.
into this trade.
Order filled.
Obviously, if these guys puke, we should get a nice upside move. Value's bullish, order flow's bullish. It'd be lovely if we got a red candle with the order flow bullish
Order
on it, but
filled.
we don't, so we can only show you what we do get. And obviously that's in line with that, ultimately in line with that very nice upside buy side reversal. Very, very nice trade, isn't it? So now you've got the chart up to date. There's a lot of stuff on it. You can see whether we're bullish or whether we're bearish on the pressure line. You can see whether we're bullish or bearish on the delta. We can check the yen in the background, or we can put yen onto this chart. And we're starting to get a few clues about things we want to see. A red candle with a bullish order flow, a blue glow, is obviously a very strong clue about something. An absorption is a very strong clue about something. The pressure line diverging off the highs is a very strong clue about something as well. So we recognize that the pressure line is now diverging into this high print, and that's obviously now a clue about possibly another sell coming in. So we start watching for that sell. We start looking at whether the yen is offered, and the yen is offered. In fact, the yen offered a while ago, in fact, into these prior highs. This is the normal chart. You can see the yen has actually been offered here as we've tested into these highs. And you may have been looking for that absorption to trade into. Well, did you see the absorption? There it is right there, right? So there was absorption when the yen was falling. There was absorption right there at 42.3. Well, that's that absorption right there at 42.4, isn't it? So if we liked it at that stage, we could obviously have tried to sell into that at that point. And obviously you can see this green candle was a very good candidate to sell into. You know, because obviously we've got the sell side pressure, there's a buy side imbalance, which is obviously that buy side delta, but the pressure line's dropping, suggesting an absorption, doesn't it? Suggests an absorption. And obviously that little trade at that point, 42.3, did drop quite nicely. And you can see you could have made some money on it down to 41.5. It's under $100, but at least it's a stop at break even, worst case. You can see it still looks like a sell, but we've obviously got a top right-hand hold now in this little auction. So obviously you're now thinking to yourself, right, let's get this sweep done. Let's get the sweep out of the way and let's see if that value builds on the offer again. At the moment, you can see it's yellow dots. So there's no value building on the offer from the gold and the silver markets just yet, right? It seems as if we've got a fair value score on the value line. And with a fair value score on the value line, I'm not going to be wanting to get too involved in that short sell. When the value goes negative, you'll see a pink dot appears, or a pink arrow appears above it. So we can start recognizing the value starting to build in line with this top edge. And then what are we looking for? A buyer getting absorbed. What does that look like? A big red box. If there's a big red box, we can obviously look at that and say I could put a sell order below it. And obviously you can see the pressure is starting to come back out again here. So you're going to start looking at that on your gold
Order
charts. You're going to
filled.
start looking at that from your trading chart point of view. And you're going to start seeing whether there's going to be a sell opportunity against this if we get an absorption. We still haven't seen any absorption
Order
yet, right?
cancelled.
So we're looking for this red square into this rally phase. We want to see that absorption so that we can get a lean against it. If you're still believing that the value is still bearish enough, if the value score is still bearish, if the pressure line is still bearish, in other words, you get that systematic response to that short sell on gold. And obviously from that systematic response, you obviously start looking at that as a possible play. By the way, when I said about the S&P target price, what did we give you as a target price for the S&P? Does anybody remember? Anybody remember what we gave you as an S&P target price? So we said that the price break of 44.95 should trade 44.60s, right? What price ended up trading on the S&P? You can see that for yourself, guys. You can see that for yourself. What price traded on the S&P? 44.60s. Yeah. So you can obviously understand that that's not a surprise. That's by design. You know, it's just the dealer keys, the dealer ideas behind the keys, the dealer process behind the keys, coming into those key reference points, looking for that idea that we've got a bid offer spread there based on the dealer keys as a starting point for bids and offers. We said that earlier. We already know where the dealer's market is being made. Then we know the dealer's bids is at 44.60. The dealer offer is at 44.95. 44.60, 44.95. Yeah. I think we'll finish off with that today, guys. It's obviously a Wednesday, so we're going to try and get finished early so that we can get a break before we do the cheap seats at 8 o'clock for an hour. And we'll get ready to rock and roll. So we're going to be looking at dealer pricing again this afternoon. We'll be talking about dealer pricing. And we'll get obviously a view of what that dealer pricing looks like, the concept of dealer pricing to try and encourage people to start thinking about the market in terms of bid and offer spreads and about their bias, and using the trade log as an ability to start recognizing that there might be bids, but we've still got to put in the work to figure out where that bid is. We've still got to put in the work to figure out what we're going to be doing with that bid and where we're going to start bidding for that bit of business. So we're
Order
trying to
filled.
short circuit the process a little bit, shortcut the process. And obviously, then it's up to individuals to start recognizing that shortcut as a real money trade opportunity. Anyway, hope there was something of interest there. Obviously, the gold scalper is available on Sierra Charts. If you have an interest in it, then obviously as a systematic trade idea, it's giving a lot of quality ideas. It gives you a few ideas about where to go for trades. It gives you a few pointers, some nice pointers, add in some order flow, add in some other extras, and all of a sudden it can actually become a very useful trade tool for you going forward if you want to use it and if you want to adopt it. Thank you very much for developing it, David. I don't know if he's in the room today, but anyway. We'll finish off with that. We'll see you guys if you're interested at 8 o'clock. But believe it or not, it's not a classroom. It's a sales pitch, so it's not that
Order
interesting for
filled.
you guys. But we'll obviously be touching on questions that we've talked about today about pricing the market properly. So
Order
if you're bored out your mind,
order cancelled.
then please decide if you fancy joining us. Join us at 8 o'clock London for the closing last hour. Anyway, I'm going to say, for the meantime, I'm going to say ciao for now, guys, and I'll see you if I do see you. If not, I'll see you in the morning.
Thank you, Ray. Good stuff. And we will not be in this room, Miguel. We will be in the other room. And Serge will drop the link in here. We don't put it in until after we finish in here because if we did, we'd have confusion. So he will drop it in here. I think he's emailed it out to everybody as well. But as Ray said, if you have nothing better to do, come join us. Come have a little fun. Thanks, Roshan. We appreciate each of you. Make it a great rest of your Wednesday. As always, do something kind for someone.
Order
Hug your
submitted.
loved ones. Tell them you love them and check on someone. So if you're not going to join us, those are your marching orders for the rest of the day. We'd love being able to have the trade log up and a big shout out and thank you to David.
Order canceled.
He did make the gold
Order
scalper.
filled. Order submitted.
Theo, he is. He is. Gonna make, he's, Reeve said that he said he's working on it, and I thought that's what he had told me as well. You're so welcome. You're so welcome. He usually starts stuff in Sierra charts. He says that's the easier one for him to get started in. And Murray, yes, we will record the 3 o'clock. But if you guys can join us, do so, do so. Send your friends.
Order filled.
We will see you guys
Order
this
canceled.
afternoon. What do we have? We have money flow in part 1. Jackie probably could. Well, I'll ask him. We could do an upcoming session, like an afternoon session. That would probably work.
Order filled.
We could do it. We can do it.
Order
Anything
submitted.
on the labels? We have money flow. We have the gold scalper with copper and silver.
Order submitted.
Anything? Let me know. If not, we will see you guys over in the other room, 3 o'clock Eastern. And you know Ray will probably be in there early, bringing in, seeing what the afternoon session brings for
Order canceled.
trades. We appreciate you guys. Make it a good one. Thanks, Ab.
Order
And
filled.
the good stuff.
Order filled. Order filled. Order submitted. Order submitted. Order submitted. Order submitted. Order filled. 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 Order. Order filled. Order submitted. Order filled. Order filled. Order filled. Order filled. Order filled. Order submitted. Order submitted. Order canceled. Order submitted. Order canceled. Order filled. Order submitted. Order submitted. Order submitted. Order submitted. Order filled. Order canceled. Order submitted. Order canceled. Order filled. Order submitted. Order submitted. Order submitted. Order filled. Order canceled. Order submitted. Order submitted. Order submitted. Order filled. Order canceled. Order submitted. Order submitted. Order filled. Order filled. Order, or, order filled. Order canceled. Order submitted. Order filled. Order. Or, order filled. Order filled. Order canceled. Order submitted. Order submitted. Order submitted. Order submitted. Order filled. Order filled. Order filled. Order filled. Order filled. Order submitted. Order submitted. Order submitted. Order filled. Order filled. Order filled. Order filled. Order filled. Order filled. Order canceled. Order. Order filled. 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 Or, or, order filled. Order. Order filled. Order filled. Order. Order filled. 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 Order submitted. Order canceled. Order submitted. Order cancel. Order filled. Order submitted. Order filled. 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 Order submitted. Order submitted. Order submitted. Order filled. Order 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 filled. 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 Order submitted. Order filled. Order filled. Order submitted. Order filled. Order submitted. Order filled. Order filled. Order filled. Order filled. Order submitted. Order filled. Order submitted. Order canceled.
Hey, Annalisa, if you want to send them to my email, if you're not on Skype, you can just email me, but definitely want to get added to Skype when you can.
Order submitted. Order cancelled. Order submitted. Order canceled. Order submitted. Order canceled. Order submitted. Order submitted. Order canceled. Order submitted. Order filled. Order filled. Order submitted. Order filled. Order submitted. Order submitted. Order canceled. Order submitted.